Good afternoon, everybody. Good afternoon. Welcome to Top Trading Edge, guys. Setting up the account. If somebody can verify, uh, if you can log into YouTube, see if it is working or not. Uh, YouTube, Twitter links posted there. If okay, I'm gonna share with this link. Sorry, guys. Okay.
Good evening, everybody.
Good evening, everybody. Good evening. Welcome to Top Trading Edge. We're gonna start the video with the disclaimer first, and then we get rock and roll. So this video is for education purpose only, not recommending to buy or sell any sort of stocks or investment. For your financial advice, please consult with your professional financial advisor. Okay. So we're gonna probably wait a little bit. I guess Sigma, few more people, and then we're gonna start. I need to start the Discord also. Hold on, Discord is waiting too. So let me see Discord. Yeah, I gotta start the Discord live stream, and if somebody can check a live stream working on Discord, and if any question, type it here. Okay, sounds good. Okay, just making sure that there is okay, let me see on Twitter profile. Okay, yeah, so we are now live on Twitter. Okay, let me pin this one.
If you want to make me co-host,
yeah, I'll do that.
Invite some people.
Thank you. Okay, you are now co-host. So guys, if you can help on somebody, click on profile and the first link on profile, that's the video. Twitter, if you can retweet and like, I would appreciate, so we can reach to the bigger audience. Same thing, I know Discord, if you guys there, guys, please Twitter, click on my profile, and if you can help us out, because I try to have a Discord as well as Twitter and as well as YouTube, so we are live on everywhere, on YouTube, Discords, and Twitter. But please help. I know Discord is more comfortable, but please get on to Twitter. If you have the Twitter account, log on to your Twitter, and if you can help to click on profile and at least retweet, because we only have like 3 retweet. So please right here, click on this over here, and let's try to reach to the bigger audience. So your help would be appreciated, guys. Okay, sounds good.
If you want to post another link, okay, you did post the YouTube link.
Yes, I did post the YouTube link, as well as I post the Twitter link, and the Discord is always there, right there on my profile. Right here is the Discord link on the top profile, and then inside also right here there's a YouTube links also there. Discord link is also there, and Twitter we already here, so Twitter can see that too. So yep. So what I'm trying to start with the let me get rid of this one. This is YouTube one, right? So if somebody needs a YouTube link, right there on top, so I'm gonna get rid of this one, delete this, and let's continue with this link. and then we have this link. Okay, rock and roll. So let's start with the we're gonna just take a look at a real quick. Future is flat. It's not going anywhere, just slightly positive. But let's start with the what I think for the next upcoming week before we get into our planning. How we need to, everybody is always expecting to make a profitable account to be profitable, but again, everybody's different, right? So I'm gonna give a little bit how we need to pick, how we need to be to be a profitable, because what happening is most of the people making mistake because we copy or we try to follow somebody or we try to do something different, which I'll go through that. Okay, so first of all, let's take a look at the market actually. So if I take a look at the market condition right here, S&P 500 yesterday closed below 200-day moving average, which is around right here around 448 449 area. So if we close below 200-day moving average, which is red line right here, if we close below, open up here, as long as we don't cross, the trend will be bearish. So overall right now S&P 500 is basically slight bearish turn right here, 50-50 I would give right here. So why? Because if you look at it, S&P 500, this is daily chart, guys. Okay, so whenever it's daily here, look, when we were here and the MACD reverse and then we cross all the way and we are now the almost overbought category. Now we are trying to trend down. The blue is crossing, right? These are daily charts. So slowly trend is going down. But again, market not gonna go immediately down. If you're bearish and you expect to bearish 1 day or 2 days, right? Doesn't happen like that. It's all market always take care of bears and bulls both the way. It depends how they want to, how you look at it. So we have to go with the market. We cannot go against the market. Let the market go first and then we're gonna go. So right now I'm just trying to read the market, and as you can see, this was the bull trend, and we already know that was a bull trend earlier, and we follow that. Now once we broke the 200-day, this trend change, and I draw the trend line. I say I'm not gonna be bearish unless my trend line breaks, and as you all know, that trend line broke and we now trending down. So again, market right now just waiting for the, remember we have the most important data CPI. I think the CPI data coming on Tuesday. CPI data is coming on Tuesday, which is April 12th Tuesday, and that will be the March month. Okay, and this data, this coming this is after the war started, and then this data coming. So basically this would be a disaster probably, so keep eyes on that one. And also if you guys all, I don't know, do you know or not, the last Friday the 10-year yield inverted to the 30-year. So 10 and 30 is pretty much, so I'm not gonna go more into the yield and bond more, because then we won't be able to cover much, because everybody has a lot of questions probably at the end also. But just to let you know, if you come live, I always be live Monday to Fridays morning 9:30 live until 6 o'clock. I'm always live, like 9 hours live, and streaming also, sharing my screen just like that. Okay, so I do talk a lot about every time. So but today we have limited hours, like 2 hours we have to wrap up everything, right? So I'm not gonna go in more details, but during the day hours we have a lot of time, so we can discuss many areas during the daytime. But right now 2 hours we got to wrap it up. So yield curve basically try to the shorter the period, the yield has to be lower, and the higher the period, which is 30-year 10 and 30-year yield. So 30-year yield is right now lower than the 10. It happened on Friday, but again then I was just looking at this here right here, 2-year treasury yield tops 10 years, right? So 10 year is a shorter period. When you lend money, somebody say, hey, I'm gonna give you a loan for 2 years, your interest rate will be little lower, because you are only lending for 2 years, risk is less. When you lend somebody 10 years, the risk would be higher, because you don't know when he get bankrupt, right? So that's why you're gonna charge more interest rate. So that's why now what exactly happening is 10-year or the 2 years yield is top in 10 years basically. So that's what they are comparing with the 2 to 10. No, then Fed said no, we only compare 10 to 30. Okay, whatever they can compare it, but basically we are in short, we are basically yield is curving, and that's the inversion, and the inversion means we are going the trending down. That's not good for the bond market. Those who are holding the bond, they are heading into underwater. We will talk later on that. Okay, so that's the one thing I notice here, which we have to keep eyes on it, because bank has all the different indicators, like how we use S&P 500. They have an indicator, but they're not gonna say what they think. So for example, right here, look at this yesterday headline. BlackRock says US recession not imminent despite yield curve inversion, right? So BlackRock says, though, okay, the yield curve is inversion, but we don't think is imminent. It's not gonna be 100% that is gonna go be recession. Look, I mean, they have a $13 trillion. They are the market maker. They are one of the market maker. They are the bank. They have a heavy portfolio, right? So we do not know the agenda driven headlines or not, but what we need to do is we need to always look at the headlines. So same thing, I look at here also. Remember I tweet about it yesterday that that Bank of America said the same thing also. So those who are not follow me, probably they would know. So Bank of America also warns the recession shock is ahead. And but then Goldman Sachs said that, hey, S&P 500 stocks have potential upside over 60%. So Goldman Sachs said is gonna go up 60%. So everybody is just flip flopping. We do not know which direction is they wants to go, or but we do not want to follow the headline. Remember, for headline is just the our indicator. We can't react based on one indicator. We need more confirmation in different ways, and that's how we go by. So what we do is we do technical, fundamental, financial, geopolicy analysis. Based on that we move. We don't just based on move because somebody as some Goldman Sachs say, because we do not know those are agenda driven or not, right? That's why just to make you aware of that we do not want to go in that way. So what I notice here is S&P 500 is below 200 moving average. So where are we heading, right? Everybody has the same question. So I'll try to little bit give you idea that how things are looking. So I always take a look at the volatility fear index. So we always take a look at the VIX, where the VIX is moving right now. So these are daily chart. Each candle represents the 1 day of the work. So if you take a look at it, this is the 1 day of the work, and I'm talking about 2021 right here. So every time we test the floor and it bounce, right? So this is the inverse of the S&P 500. Remember, volatility means what is volatility? This is the gauge of fear factor in the market. If SPY is going up, if the SPY goes up, then you will see, wow, will volatility gonna go down. If the SPY goes down, the VIX goes up. So if you look at here, probably in February, SPY was down, right? That's why we were touching the sky on a VIX. But now the SPY is bottom. Now table is turning, right? So this is one of the indicator. Can we act on immediately? No, we got to just slowly go by. That's why we follow Top Trading Edge. We always there every day live, and we always guide you one step at a time. The moment you want to go first before the market maker, then you'll be the one who will get slaughtered, right? That's why we don't want to go first. But again, now the table is turning and we have to follow. So that's why we try to play that way. So this never lies, guys. Okay, these are real price index happens here. When you see VIX, every time VIX test the support, look at this, how many times it tested the support, and you can see right in front of your eyes. So don't believe Josh, you know what I mean? You believe your eyes, right? You believe your eye. Every time we test, and look, I'm sorry, man, this is very sensitive. So same thing here too, right? Every time we test, bounce, and then we got rejected, right? This is the cycle, guys. What I'm trying to explain you is all these cycles. Same thing happens in S&P 500, right? So when these VIX is right here, now we tested last time when we tested in January 2022. So let's take a look at it. S&P 500. So January 2022, S&P 500, right here we were on the top. Right here, pretty much right here, January 2022. So no fear. Market was fully fearless. How fearless? Market was fearless.
And Josh, this week coming up is a short week due to a holiday. So expirations are on Thursday, not Friday.
Oh yeah. So those are option play. Yes, absolutely. I'll be talking that later stage when time comes. But I'm just right now. I just want to find the direction for you guys so you can at least understand, because some people like everybody is not bearish, everybody is not bullish, right? Everybody is different play. Some people bullish, some people are bearish. So based on that, I just need to analyze the market, and then accordingly they can play with them, right? Some people are day traders, some people are swing traders, everybody is different. So today I'll be discussing that the other part which I was talking about. But anyway, I just want to right now talk about the market. So market trying to, as you can see, VIX is a fear gauge. The fear goes higher, the S&P 500 goes down. Remember, fear goes higher, S&P 500 goes down. Okay, so that's the scenario, and this is what the trend is here. Right here you can see that. So if somebody believes that market is going to go up, which is this headline, if Goldman Sachs Goldman Sachs said that 500 S&P 500 stock have potential upside of 60%, then they did not mention the timeline. So I can't blame, because they are very smart. Everybody knows banks are the most smartest people on earth. So we can, but just to give you, there is no timeline, right? They say, oh no, it could be in 10 years, 5 years, we don't know. But anyway, we don't want to follow what they think. But what I'm trying to teach you guys here, that definitely we are right now, some point of time we will be trending, because the clouds are also above our head, which we already mentioned about the CPI data coming in this Tuesday, guys. Okay, so make sure you have all these thing in mind, because when we sleep, when we wake up, we forget what was the cloud. You have to keep all the indicator in your mind before you go long or short, whatever you need to think. Okay, I'm here, I'm teaching you guys, so that way you need to keep. If not, you can keep a little booklet, guys. Keep a book on your table whenever you trade, and write down, say, hey, these are the major indicator I need to remember. Otherwise, if you're forgetting, then keep that thing in with you, so that way you don't lose it. And then when you trade, you always remember, oh, let me look at this what are the points I need to remember, because you don't need to keep trading 10 trade. You trade one, trade a two, but make sure you trade accurate. That's the trend. That's what I like to teach you guys here, because when we go live, we trade 10 times, 15 times. People trade. Okay, I don't like to. I like to be little more to helping you more, so I like to avoid. But people do trade 10 times, 15 times, 20 times. I used to do 500 times trade. I have done. On S&P 500, I used to do 500 contracts. But again, right now my goal is different. So I like to, what I like to do is I like to teach you guys first. All right. So this is what we need to keep in mind. Now remember, guys. Okay. So the bond we already discussed about, yield we discussed about it. Now the debt ratio is record breaking, guys. Okay, so whenever the interest rate they're gonna rise in the May month, right? So when that happens, you got to be very careful now. And why? Because what I notice here in the chart right now here, if you look at the daily chart, remember, guys, okay, look at this MACD. When we were here, look at the bottom right here where my cursor is. Okay, so blue line is crossing the brown line, right? So we were right here when we found the support here, and then we bounce from here. This is called diversion, right? So this diversion, look at the diversion, it constantly went. So this was the bullish cycle, right? But we can't just react on based on one, guys, okay? Because we do many ways to analyze the market, and that's how we become bullish and bearish. So now look at here, what exactly market is doing. Blue line is crossing the brown line going down, right? And look at this red volume right here, bids and ask right here. These are all the red turning over here. Same thing apply here too. Look at this, when we were look at my cursor where I'm here, and look at the bottom. If you look at all the way bottom here, the blue line was crossing from the top, and diversion started pointing down. That's the bearish right here, and we went. And then look at the market, right? Then market found the support, and it traded in between. So there are a lot of cycles here. Market has a 7 days, 10 days cycle, but over here we are extended territory buy zone right here. So we are overbought territory right now. Now we are trending down. How? Because we are below 200-day moving average. So this is my thesis, where I think is market is trending down, and that's why market could not get off the deck. Even last 3 days, I thought maybe we try to poke through the 200-day moving average, but we could not close about 200-day. If you look at these last 3 candle, 1, 2, 3, right? We could not. We tried to break, could not. So there is a pressure downward. and that's what is showing me here. There is a pressure downward. Okay, so this is how I right now take looking at the market. This is what I can think right now, that there probably, you know, the pressure is downward on it. And one thing guys, remember, I don't know, did you guys know I tweet about it on Friday about what? Nvidia, guys. I don't know, did you guys notice this? Nvidia seeks approval to double authorized shares to $8 billion. So what does that mean? They are not splitting. They are not talking about split. They are talking about diluting. But they said this is not approval. Okay, they said we're gonna go for approval voting. So this is not the confirmed headline. I mean confirmed headline, but they are seeking for approval with the shareholder approval. So probably somewhere in June, May, June, I think they are thinking. Some point of time, the cloud will be clear probably tomorrow when the market is open, or maybe this week, and then they will come up with some more better ideas what and all they want to do. But we discuss about this. So what does that mean? Because whenever a company comes with this kind of news, the way I think differently, I think is why they have to do this. Always think why they have to. Don't think that, oh, I'm gonna do this and I'm gonna do that. You have to think bigger things, that why they are thinking like that. Because they need money. They are planning something big, something would be there, right? So if somebody wants to dilute their share, then that means they need money. They are planning some big, two things, right? Two things can happen, but market would not like if they dilute, right? So we have to keep eyes on this one a little bit, you know, as the time moves around, goes around. And we will see the pressure also. We're not gonna go simply short immediately, or, you know, go bullish also. just let the market maker decide which direction they wants to go, and then we go behind. We only care about is 20%, 30%, whatever percentage we get, but let them go first. This is what I teach here, because the moment we go first, we lose money, right? So this now most important part I wanted to talk to you was the market, you know, overall market, which would be the you know, when the yields are inverting. That is a dangerous, it's a long process, but it's not going to happen overnight. Whenever the yield inverting, means there will be a different headline. But based on my analysis, my experience, my research, it takes about, like, you know, sometimes it takes 9 months, sometimes it takes 24 months, sometimes it takes a year, because whenever the yield curves yield inverts, that is recession indicators, right? So that's why people think like that. But at this time, I think is definitely we are heading into that direction. Though we have one indicator we have is a stronger, which is job data, right? Everybody has a great job, everybody getting jobs and all. So that is the only one indicator. Normally that happens yield inverting, because when you have a recession. This time we have opposite, we have inflation. So we are opposite. We never experience. Cathie Wood never experienced the inflation, guys. Okay, so if somebody follow Cathie Wood, then Cathie Wood was not at that time 40 years. I'm talking about history. We did not experience here most of the time. Most of the people did not experience the inflation. So that what my biggest worry is this, that when the interest rate goes higher, nobody's talking about that, but one thing I think, that whenever interest rate goes higher, I always keep checking. Every day I check so many balance sheets of every company, right? Everybody comes here, Josh, take a look at this company, Josh, take a look at that company. And then I look at their company, their balance sheets, and then I analyze it. So for example, I just want to go real quick, okay? I'm not gonna go, but whenever we analyze the balance sheet, and we look at their debt, right? So for example, let's see Nvidia has a debt or not. So we come to know. So when we look at here, okay, so Nvidia has a $12 billion debt right here. Total debt, they have a 12 billion. So just like Apple, right? Let's look at Apple. Just give a little. Are we gonna you get some idea that how many people have a debt? So look at that debt. There is 123 billion debt. They have it. So you must be thinking, Josh, why are you looking at this? I have to, man, I analyze data. Remember, I'm not just gonna look technical. I like to go deep dive in the foundation, and then see what exactly they are doing. Is we create a celebrity in our mind, Apple, Tesla, this, but you need to deep dive in what they are doing. So when you see $122 billion, wow, that's a lot. So that means they will be paying a high interest rate. So many people think, why Josh they do this? Why do Apple need a debt? Why Apple go debt? Because they when they go and announce, hey, I'm gonna do buyback program, right? You heard of, right? When stimulus money coming in and they say, okay, we're gonna do buyback. Why? Because lower interest rate, so they wanted to do buyback. Now here is the twist, guy. Okay, nobody talking anywhere, only Josh is talking and prop trading is talking, and that's why you always follow here and you learn out of it. Whenever, guys, whenever you see huge debt, and people, all these corporate, there's so many companies, they had a huge debt because they thought, okay, government is giving me the money, I'm gonna go and do option, buy options. Stock company has, they buy back their shares. When they announce the buyback share, what happened? Stock goes skyrocket, right? $10 stock goes to $20, and $100 stock goes to $120 because company's buying back, they're bullish. This is how we retailer knows. Other people also know why company's buying. But that time was perfect. Now opposite, the table is turning now. What do you mean Josh table is turning? Well, now what happens is the interest rate going higher and higher. When the interest rate goes higher, their balance sheet will be suffering, their quarter will be suffering. Why? Because interest rate goes higher, they'll be paying higher interest rates. So when they have a huge debt, they have to pay higher interest rates, so they won't be able to perform well on their quarters. So what company normally does at that time, right? What they would do, what would you do if you have a debt? You're gonna pay it off, right? So that way you don't have to pay unnecessarily money. But then how you gonna pay off, because you don't have the money? Well, you have a stock. When you have a stock, what you're gonna do? You're gonna sell your stock, right? And when companies sell the stock, how many they sell? They sell 100, 200, right? They sell a big chunk because they need money. When that happens, then what happens? Who will be the buyer? Would you be able to back it? Would you be buying those big quantity? Then the stock tanks, guys, right? And when this happens, when interest rate goes higher, these are the domino effect. We have to keep it in our mind when these things started happening. So I'm not talking just Apple, okay, guys? So don't take me wrong. I just I'm giving you idea that because every day I go to so many balance sheet, guys. You know that what Josh does, right? So when I try to teach you guys, you have to look at every scenario, and then you go and be long. So for example, let's take a look at Tesla. Tesla had a lot of money. I know that that Tesla was the first meme stock. So that's why they made a lot of money. But yeah, they don't have a debt. They have a $9 billion debt, and but they have cash $17 billion. So they will be fine probably on that one. But many other companies, AMD and all. So all these companies, AMD, they don't have the debt much, AMD and all. So keep whichever company you like to follow, always you can take a look at their debt, because if they have the higher debt, at the end they will be, if they are not performing well, their earning not going well, and if their product is suffering and you think they will have an impact in this economy the way we will be heading into, then they will probably sell their stocks. If they sell, that happens, you would not come to know, unless slowly you come to know, maybe they will sell, the price goes down, right? And that's why you need to keep that thing in mind, because the another thing I add on that too, because every Fed thinks this, that hey, we're gonna increase the we're gonna start doing the QT, quantitative tightening. What is quantitative tightening? When they do quantitative tightening, they're gonna shrink the balance sheet 95 billion a month, they said, right? But guys, do you know that they were quantitative easing, they were doing around 120 billion a month. Last 2 years they did that, 120. And what did they say last week? They said we want to do rapid pace quantitative tightening. Do you think they did a rapid pace? Right now announcing 95 billion, that's not rapid, right? So looking at the headline, we think it's rapid pace. No, it's not rapid pace, because they're afraid that economy can collapse, it can happen this way. Just to give you idea, guys, we have to keep all these things in mind when they throw the cards on the table, and then you look at it and you look at, oh wow, you got to look at the other side of this, what they have it in, what are the other cards they have in their hand also, right? That's why. So they were quantitative easy was 120 billion. Right now, billion, B as in boy, guys, okay? And now they are saying 95 billion quantitative tightening. So they will be dumping in the market. So when they dump in the market, what would happen is out of that, I think 35 billion will be mortgage-backed securities, and the rest would be all the bonds, right? So market will be vulnerable when that start happening from the May month, right? So very going to be vulnerable right now. Depends how they manage it at that time, but I know that everybody will suffer in there slowly. But when that is the process of every month. So mortgage, who gonna buy the mortgage-backed securities when they dump it in the market? Well, remember when the pandemic, they said we're gonna give you a mortgage rate. They bring down mortgage rate to interest rate to 0%. So mortgage rate was, people were getting loan for 2.5%, right? So people jumping in. Last 40 years never happened in history. Pretty much 2.5%. And everybody go and buy houses and everything. Take many loans and credit debts, and you can imagine everything is record-breaking debt right now. Record-breaking debts we have right now. So those all debts who took it, they will be vulnerable unless they are fixed for 30 years. Some mortgage who took it, they are fixed. I understand that part, but somebody who wants to sell the mortgage-backed security on the street, now Fed said we're not gonna buy that. So who's gonna buy that? Nobody gonna buy at 2.5%. So at the end, the mortgage rate gonna go higher and higher now. Super high speed will go, because they're gonna pile up in all these mortgage-backed security will pile up in the market, and until people buys it. Until people buy, it will keep going the mortgage rate higher. So that's what's going to happen when mortgage rate goes higher. You might think, what does it mean? Well, that doesn't mean a big lot, because our mortgage market is the biggest market. If they get suffer, though 64% people are paycheck to paycheck. If they get affected on their mortgage, they won't be able to pay extra $100, $200 on their mortgage. They go bankrupt. I mean, not bankrupt, maybe whatever, they will be suffering, right? And then whatever would happen, but rate going to go higher now, and they are saying 50 points every quarter, right? Maybe in May 50 points, and then again 50 points in June also, so on and so forth. So they want to go rapid pace on that also. So we have a little dark cloud. That's what whenever I mention about dark cloud, that's the biggest dark cloud we have, which Kathy would never experience much before. So give you idea, guys. Okay, so we need to keep that thing in mind, and our GDP is very low comparatively previous, because our GDP is like 24 trillion. So we got to keep that thing in mind, that we have a GDP low. Our balance sheet also will be shrinking in the market, and the interest rate going to go up. So what would happen is, whenever we shrink these, I mean, the way I think is this: the inflation go higher. How? In the beginning, there is a little, whenever there is any equation sets, first equation would be like this. Corporate will think, what, if I have a debt going higher on my balance sheet, I'm going to increase the price of my product. So if they do that, who will pay more money? Consumer will end up paying more money, because they think, oh no, because of we are raising the price because supply constraint, supply issues and all. They will just put the burden on somebody else, and that what they will try that. So the price go higher also, because they feeling the pressure. So hey, interest rate is going high, the debt is going higher. That can boost more inflation little bit at some point of time. Okay, until they go bankrupt or until they have difficulties, whatever they solve. But this is one little corner, and I always think that side also. We can't be just that increasing interest rate gonna solve the supply problem. So I don't go like that also, but so overall, this is the market condition at this point in terms of showing you what I was trying to explain you. So SPY VIX, we always keep it in mind, and what I see here, QQQQ, keep it in mind. QQQQ right here, we are just below 50-day moving average, and QQQ has a more pressure, gap up and gap down. So when you see like this, and the diversion, when you see like that, I'm a little concerned with, because this is how it looks to me. But market can turn around here and can go and fill the gap also, QQQ, and then go down, because there's always cycle, guys. Remember, this bull cycle, then again bear cycle, then bull cycle, then bear cycle, then again little bull cycle, and then again go bear cycle. So we have to go with the market. Okay, so right now overall trend is bearish for the markets. Meantime, before now, I change my change the topic. If you want, I can take a questions on Twitter or on if anybody has a question, I can put you can go ahead.
Hey Josh, I have a question regarding the interest rate and the debt just talked about.
Yeah, go ahead.
So you said the company who has debt, they would start selling because of the increasing interest rate. Would they have the fluctuating interest rate or the fixed interest rate? For example, whenever they took that debt, they would have fixed the interest rate, but now the interest rate is increasing. Would their interest rate would be affected?
So this is how I look at it. Normally, whenever any company take the loan, arm rate, right? When you take arm rate, is like yearly, 6 months, or you want an index rate, right? Those this is how normally company take the loan from the bank. But bank also look at it that what kind of risk versus reward based on that. So you and me would not know what kind of rate they took it, because we know the mortgage is different and regular loans are different. The regular loans would be have a, because they think is the lower the shorter the period, the lower the interest rate. The longer the period, the higher the interest rate. They might think, okay, you know what, I'm going to take a shorter period and pay less interest, and then sell the stock back, and then get my pay off the debt. That also is like a both side of the coin, they think. So we can't, you and me would not know. We have to just go to the their balance sheet and figure out what kind of. That's why all the banks, they go to the earnings and they ask this technical question, financial technical question to the company, because company can hide many things and you me wouldn't know, and it looks nice dressed up balance sheet. So that's why I try to open it up here, and so that way we need to keep that thing in mind. Yeah.
No, that makes sense. Thank you. Josh, can you take a look at the Google chart and see how is it moving?
Google, man, is looking horrible. You look at the Google is so cheap, man. Their stock by forward PE ratio, right? But the right now, based on these, Google is looking very weak right now, and I think it broke the support line also, and which was right previously here. So Google is heading to 2500. This is my support line, 2500. But again, the time horizon is important, guys. Whenever you ask me questions, help me with the time horizons and what your goals are and what your plans are.
Until Josh, until split, you can think like 15 July.
Oh, 15 July. Okay. So I mean, their balance sheet is excellent, man. Google balance sheet is $140 billion cash in hand. They can burn as much they want. So you got to, their balance sheet is great. But right now, market maker think this company is, if you look at the pre-pandemic price was here, $115. So they think it's too inflated stock is right now. Though their balance sheet is great, but market maker, they do not want to keep, they are the one who controls the market basically. So they think.
But Josh, that's the case for Apple, Microsoft, right?
Everybody.
As well, right? So they are both the same.
No, Apple is already expensive than the Google.
If you look back to a month ago when Google bottomed out at 2,500, its PE ratio bottomed out at 20, and as soon as it hit 20, it got bought up again.
Yeah, no, it's cycle. So we have to keep in mind these are the nice support, and when market tanks, these can also go down with a little bit. Same thing apply to Apple. So Apple PE ratio. So this is how I analyze. I don't go by the price, who is cheaper, who is this way. I go by this way. So if you look at forward PE ratio of this right now, Google is 24 times. But if you look at Apple forward PE ratio is 30 times right here, right? 30 times. So Apple is little expensive, 5 times more expensive than the Google is. So something like that. But right now, I mean, I would do not worry about the split right now, and I will, because remember we have a May month is a very turning the tables, guys. So you don't want to risk it right now, and just go slowly. Nothing is running away. That's what I tell you. Just let the market decide the direction, because right now every bank, their earning starting on Thursday, guys. Wednesday. This Wednesday earning starting, guys. That will turn the table on the market. Okay, so Tuesday, Wednesday, and Thursday is going to be horrible days, because look at this bank, and I'll tell you right now, every bank I'll open and you will see Bank of America, they are not exposed to Russia, and look at their last 12 days, why they are selling off, why somebody is selling off Bank of America, somebody's dumping. Who is dumping? we don't know, but somebody dumping on last 12 days, right? Same thing. JPM. Why banks are dumping? Bank dump too, right here. Then look at the Citibank. Citibank was exposed. Look at the Citibank. Ooh, ooh, la la la, right here. You see that? Huge. So Citibank is super weak, guys, right now, right? You see that? Oversold pretty much. So something is cooking. You need to just Goldman Sachs. Goldman Sachs found the support right here. So it was over, shorted here. Now they try to recover, because anytime you see one green candle means they short, and now they have to recover. So this is the support line. So we need to see this. There is earnings starting in this Thursday. I think Goldman Sachs or JP Morgan. One of them has earnings. So then let me see when is the Goldman Sachs earning is 14th April. So 14th 12. So we have probably Thursday. 14th is what? Thursday, guys, right?
Yeah. 14 is Tuesday. 14 will be Tuesday.
No. Right here. 14 is Thursday. So 14 is Thursday and 12th is Tuesday. CPI data on 12th. Right here. CPI data on 12th.
Yeah.
Okay. Sorry. And 14 is Thursday. So keep in mind, for these week, guys, is a direction day. Direction of the week of the market. Okay. I mean, quite a bit. People are waiting that, hey, let's see what bank gonna report. They want to see that, and when bank reports, people ask the question, say, hey, where are do you see a credit crunch problem? Do you see a demand problem? Do you see a job problem? Where the problem is, right? Then they will come up and say, hey, we found this problem, that problem. They will discuss that.
But Josh, don't you think the bank are going to sell off because their mortgage rate are going high and there will be less demand moving forward? Don't you think like it will going to be for all the credit line, personal loan, either a mortgage loan or any loan, right? They are going to be get more and more in future. So thinking perspective, right, of at least for next couple of years. So don't you think bank is going to sell off moving forward?
1 second, guys. I made a blunder on Discord. I did not share my screen. I forgot. I thought I did, but I did not. Now I'm just sharing, guys. So everyone. Oh boy. 1 second.
Don't banks make more money when there's high interest?
Forgot.
Yeah, Josh. So I was saying, since you are checking, right, meanwhile, so I was saying, since the loan application are going to be reduced, right? So that may be one of the primary reason for the bank sell-off, right? So in the last 10 days or 5 days or 7 days, right? Whatever we are showing for each and every bank, right?
Mm-hmm.
So that may be one of the primary reason, the slow growth, right? Less number of loan applications.
Okay, I lost the track. Sorry, man. I was typing something on a Discord. Okay, sorry. Could you repeat again one more time? I missed it.
Yeah.
Sorry.
So you were showing couple of bank charts, right, for Bank of America, JP Morgan, right?
Mm-hmm.
So and they are getting sold off, right,
Mm-hmm.
in last 6 or 7 trading sessions. So as interest rates are going higher, right?
Mm-hmm.
So there will be less and less number of loan applications. So their growth can be slower. So that may be one of the prior reason for the bank sell-off, and result can prove that, right? Since their growth are going to be slow for the next few quarters moving forward.
There is right. So that will be a little parameter. There is a little like when we want to analyze bank's earning, then there is a lot of other parameters. So they will come up and say, hey, we have a credit crunch. How much is the credit crunch going or not? If they have a more credit or less credit, they will also. People are asking more loans or not. They have a lot of parameters. They will come out with it. So that's what normally happens.
Yeah, and there is one last question, and then I'll put mute. So I was studying on weekends. So there is an oscillator in TradingView and TrendSpider.
Mm-hmm.
So it's called Schwab Trend Cycle. So generally it predicts some of the trending indicator how the stock is going to move. Like so, have you had turned on that oscillator even in the past sometime, Josh?
So we
Schwab Trend Cycle.
Yeah, so we can take a look at it during the day hours, like normal hours time when we are live. You can ask me any indicator, we can turn it on and we can go through whatever the indicators are, right? Oscillator. So oscillator is a longer term period. If you want to check that, we can definitely check that. But I also, like I said, I like the fear gauge, which market always detects. And I think, I don't know you were here or not, I did went through on a screen VIX. So
Maybe I'll ask tomorrow for triple Q. Okay, so I'll join tomorrow morning and then I'll ask to turn on that oscillator. It's called Schwab trend cycle.
Yeah.
So I study on weekend. It seems to be very nice for at least getting the direction.
yeah, so same thing right here. S&P 500 is right here, and if you look at the VIX, VIX like, so this is the fear gauge. So if you look at every time VIX test my floor and then it bounce, I circle here if you can see on your screen. So whenever VIX is the fear gauge, right? Whenever the fear gauge means S&P 500 goes up, right? And then this goes down, right? But now table is turning, so fear gauge is gaining the ground, means S&P 500 can go down. If VIX goes up, S&P goes down, right? So this is the table which is about to turn. Why? Because if you look at my divergence here, so let's go back here now. When we were, look over here, we are way oversold category right here right now. You want a VIX, we are looking at the VIX right here. Divergence is coming and you see the green dot, right? So this is divergence, and the blue line is crossing the orange one right here. But I would go in S&P 500, and I think I discussed today morning about the S&P 500. So if you look at S&P 500, look at this right now, the table is turning, which is divergent. Blue line is a MACD crossing to the brown line, and same thing over happened. Remember we are down here, same thing here also. We were up here, right? Like this right here. This is the main, when we were up here, when we were bullish. And look at the divergence. So we were all the way on top, and then look at the divergence. So this is how I look at the corner. We're gonna start from here so you don't see the other candle. So when you see divergence on a corner right here, and then it look crossing right here. So slowly.
But Josh, don't you turn on the Fibonacci just to make sure how?
No. Fibonacci, no. Fibonacci is a parabolic mono. I don't. There's a tons of waves you can follow. I like to follow the real core elements. I don't trust Fibonacci at all. If somebody say Fibonacci, I'm not a Fibonacci guy. I already did use that, and I do not like those are percentages. There's a numbers. It's like if this happen, normally it can go this or it can go this, or if it can go this. I'm not that kind of guy. I need an answer today with the proper information.
So do you go by EMA or do you go by SMA normally in your charts?
No, I like to go by my SMA, and that's not the one indicator I use, guys. My gauging style is I use macroeconomy, and based on that I analyze, and then I also use my technicals, which are as you can see that I always use those my divergence. I use my moving averages, which gives me exactly how many percentage are market down, because anytime market, simple thing, man, guys, there is no need to do these oscillator and that oscillator and this happen immediately you go change this. I'm not, if I'm failing on my indicators, whatever I'm using, then I would go and change my indicator. But if I'm not failing, I'm the first one to tell you, and I tweet here, you can go and click on my profile and follow. I said that market is changing, market gonna change this, and why it will change and everything. I nail it down here when we were down here and this candle pop, and this when we broke this.
Josh, but don't you see the higher high in Qs and in SPY? Don't you see the higher high?
No, but you don't have to look at only technical, guys, right? Do you see fundamentals or no?
No. This is my question to you. So don't you see the higher high for Qs and one?
Okay, so right now look at this. This is right now higher high from the bottom, but remember we start from the lower. This is start from the lower. This is the how we went from lower. This is the higher high. Now we went lower. So now which cycle you catching? But this is bottom line is we are lower high. Okay, this is not a higher high, guys. This is not, because higher is here. When you catch the cycle.
But Josh, do you go by daily or do you go by hourly?
No, this is daily. Why? If you want to trade intraday, yeah, you go hourly, 5 minutes, 10 minutes. But when we talking about a long cycles, which would be weekly, 1 month, then I would go daily, because that's how I need to analyze. So right now we are in lower high, not the higher high, because your higher is here. Get the point?
Okay. Yeah. Thanks, Josh. Thanks.
No problem.
I think I'm done. Thank you. Go ahead.
Yeah, so basically right now market is triggering at the 200-day moving average, guys. Look at 200-day moving average. Whenever the market stays below 200, it algo kicks in. On every computer system, algo kicks in that market is below 200-day, means we are 50% almost bearish. Why? Because still we are above the 50-day moving average. So once we broke this 250-day moving average, almost like a system triggers that almost most of the index is now going into most of the stocks in Fortune 500 company. They are going to be bearish more than 50%. Right now we are very close to 50%. They are bearish because we are below 200. So that's how the algo kicks in. But right now we are fighting right there. So it's too early. But we're gonna take a look at it if it can bounce or not, and how far it bounce and all, because it's a 100-day moving average. If you look at 100-day, it's pointing down. Remember, this 100-day is pointing down, right? The 100-day is going cross to the 200-day. That would be a super bearish scenario. It happens when 100 cross to the 200, then we'll be bearish. So we will watch. We'll see whenever that happens.
And Josh, if you check your DMs, I just sent you something. Quote, quantitative easing was very bullish for financial assets.
Oh, no. People will say that.
Tightening.
Yeah, I wrote that. BlackRock said.
By design will be negative for financial assets. And it says here we can see a plunger 11% in the S&P 500.
Yeah, so I saw that headline, and people create that things, and I do not believe in that way, because I'm asking you this: when you have to pay higher interest rate, when consumer has to go and pay more mortgages, more higher rate, when they have to pay, what do you see? What would happen? People will spend more money, or people will spend less?
I see less liquidity.
Yeah. So I do look. I'm a kind of guy, man, because I have gone through my 20-year process, and I have gone through everything, because I do not trust banks, guys. I do not trust any analyst, because most analysts, they failed 50% time, because they are agenda driven. And I learned, because of agenda driven, I lost a lot of money in my history, right? And since then I learned that I'm not gonna I'm just gonna keep it my indicator, but I'm not gonna apply that indicator that will be not my regular indicator. I'm gonna use my other indicator also, and then balance it out, and based on that I will go. I'm not gonna go just because they said so, because there's a lot of people, they create celebrity, Goldman Sachs, whatever they said, I'm gonna close my eyes and I'm gonna follow that. No, that's not me. I used to do that, but no more now.
100%.
Josh, back in the 80s, when interest rates hit 18% mortgages, the banks made all kinds of money.
Oh, yeah, you're right.
That was probably the best time ever. So high rates, banks make money.
Yep, you're right. So it's not only one thing, bank make money. Bank also has a high risk also. Remember, when the interest rate goes high, some people get default. When they get default, bank also lose the whole whatever they gave a debt. If they give them $1 million debt, right, to somebody, credit somebody to $1 million, and then they like 5% interest rate, 6% interest rate, or whatever it is, but at the end, if the guy won't be able to pay, bank lose whole $1 million, because over here
they do, Josh. But all in all, the bank, when it's high rates, banks make money.
Yeah, I mean, I do not like to apply that in one. I do not go one way, because remember, interest rate goes house, guys. You know how bank hedge their all the fund, they go and put money into bond. Do you know how much bond value right now they are losing? Some of the bonds are vulnerable, like $1.50 they are getting right now. So they're not gonna tell you, but I know that they are losing money, because government is Fed stop buying now, right? So when those are the bigger market than our equity market is. So what would happen to their bond? They are holding. That's their hedge. They thought that is the hedge. Right now, that is the most vulnerable they have.
What time was that when the banks all got bailed out? When was that?
Oh, 2008.
Was that high interest rates?
No, that time we did not have the inflation. That time we had a deflation. We have opposite right now. We have a three different problems right now going on. We have inflation problem. We have interest rate is already zero, right? And then we have a balance sheet is $10 trillion, because we've been going since many years. We're supposed to shrink the balance sheet in 2018. When we shrink in 2018, just to let you know, guys, 2018 we shrink a little balance sheet, 40 billions a month. That time, go and check the market, how much market tank, right? Constant tanking. So just to give you an idea, if somebody says that, just go and take a look at it. 2018 market was tanking when we that time did not have inflation, guys. Okay, right now I'll just give you an idea. Today I went. I play volleyball, and I had one of my friend. He he booked his Tesla and he's supposed to get it last year. He booked it and he's a Model Y supposed to get it, and 6 months, right, pre-order, 6 months supposed to get it in March, and they said we're gonna deliver you in April. Then they said now he said then again they changed and they said we're gonna deliver in the May, and now they're saying probably in June. If not June, we're gonna be August now. But now they're saying August, so they could not deliver almost year. 8 months, 9 months, they are not able to deliver, guys. Not 9 months, probably about more than a year after he booked Model Y. I'm not talking about model, other car, regular car. When you go and book on their website, regular car to buy, which they deliver right now, those cars they are saying August. Why? Elon Musk said I need to buy a mining company. Why? Because there's a lot of supply constraint, guys. So a lot of issues. So we need to fix that supply constraint. That is not an easy task. It takes many months and a year.
One quick question. Josh, one quick question. I see on your charts you only have MACD. Is that all you have on your chart? Just MACD?
Yeah, MACD right there.
That's it?
Yeah. No, MACD, which this one right here. Yeah. So right here, RSI and MACD. RSI, the MACD is crossing right here. Blue line is MACD crossing right here. That's this is just the one indicator which I like to use it, but based on my other also data I use, right? So we also need to look at our moving average, then the daytime, the pressure we take a look at the earnings, I look at it, and many other data we use the macroeconomy. Based on that I go by. I don't just simply go by just the technical or some oscillator or some below 200 day, because market can play the cycles, right? So we have to go. We don't want to go.
Do you watch the volume?
Yes, we need to watch the volume right here. So volume is I don't need to keep everything on, otherwise it looks weird to the people. But if you see, the volume is down. But now if you look at the last few days, is the red volume is going up, and I always look at the profile, the price, the volume profile and all. But I don't right now. We don't want to go and spend too much time, because we have a couple of hours, and we have during the daytime market hours we have plenty of time to talk about it. But at this point, I just want to give an overlook to the people who are.
Good evening, guys.
Thanks, Josh.
Okay. Good evening. Good evening.
Just a little comment. I heard that somebody mentioned that when the rate goes high, banks benefit. Which is often thrown around, but that actually applies in normal context. In the normal context, which is not being said, is in a growth environment. What we are entering is a stagflation, wherein we have high inflation and lower growth. So in that case, there are not many new people taking loans, but there will be people who are putting their money into the deposits. Every deposit is a liability for the bank, and every loan is an asset for the bank. So considering the scenario forward, the increasing rates are not good for the banks. Only when this entire thing is digested and we start a new growth cycle, then the banks benefit. That's it.
Gotcha. Yep. I mean, that could be a side. Let's see. We will see the bank balance it. If we don't want to go right now immediately, we will, whatever the headline they create, we just need to view. That would be one of the indicator. If they think market gonna jump 60%, okay, we'll keep that indicator. But I mean, I have gone through several cycles in my life, and I think we are heading into the worst time. Though right now everything is dressed up, it's gonna take a little time. It's not gonna be, because we are kicking the can down right now, and that kicking the can down how long? And let's see. I will see I always believe in earnings, right? I will see their earnings every quarters, and I feel when when interest rate goes up and then the bond goes down and government stop buying, then the real color will come into the real field. There you will see that. That's why I don't want to challenge anybody or anything. I'm here. I like to teach you guys. It's up to you how you take it, because we always, there's a coin has both the side, bulls and bear, right? So it's going to remain, and that's how things are, and that's why the market maker makes money in every cycles, and they exactly know how to play that. Only thing is we need to be little vigilant, little alert, little advanced. When we become like that, then we don't lose money. Point is that it's up to you guys how you take it, because if you have experience, if you gain experience, then you should be fine. But you always need to take a look at your portfolio. Whatever action you do, you think is doing good, then just continue whatever you're doing. All right, and that's how I think.
Hey Josh, good evening, by the way. I
Good
just
evening.
had a question on your opinion on gold. Like, for example, for the next 6 weeks to 2 months before May and June rate hikes.
Okay, so the gold, look, I discussed on a Friday gold about the gold, that this is how the gold being controlled by the government, because gold is a precious metal, guys, right? Look at the nickel, look at the every precious metal, even wood also. Wood is now worth of gold now. Look at that wood. It used to be like when you go to Home Depot, $1 2x4 is now $4, right? But only gold price did not go up, right? Why? Anybody knows why?
Government's holding it back, bonds.
No, right, you got it, man. They want to sell paper. They if the gold price goes down, the money coming from different countries, right? Different big guns, right? You and not, we don't buy gold. People who are a big country, they think want to buy they don't want to buy gold because gold is going down. But look at the treasury. Look at the treasury. They are safe haven. So people buy those paper, treasury bond. So, and those are not people, those are not retailers, those are big country. They have tons of money, and they believe in America, and that's why all European countries and African countries and all these, they go and buy this bond. That's why we have $119 trillion debt, $1,900 trillion bond here right now. Those are vulnerable. So because you look at the always bond rate, our Fed rate always has to be below the inflation rate, but inflation rate is higher, so people are losing money right now. So that's what I can tell you right now. Bonds are vulnerable, and then when they feel it, then you will see in the market long run. But give a little time. But I need to answer about the gold. Okay, so gold, what happened is same thing, guys. Right now they are controlling the gold. So what happens is people who are living in a different country. Somebody can mute the mic, would appreciate, so it doesn't bothers others. Okay, so what happens is when the gold right now, market maker, they want to bring the gold down. When they bring the gold down, who will benefit? Bond. Who issue the bond? Government, right? They issue the bond, so the people will trust in the bond. But if the gold price goes down up, every country who invest in billions of dollars, they think, oh, let's go and buy gold because bond is losing when you compare with the gold versus bond. That was the scenario happening last many years, right? Now the table will turn, you watch, because bond is now vulnerable. They are losing the value because the interest rate has to be below inflation rate. That chart I already showed you guys before also, and I tweet about it too. That has to be remain below. Otherwise pointless, right? Why would I buy a bond if I think I have that too. So right here, so let me show you. I'm gonna bring it here. I have it right here. If you can see, so if you look at this, the brown line is the CPI data. If the CPI, my inflation is higher, then and the yield, which is bond yield right here, is right here, and the bottom one is the Fed rate. So if the inflation is going high, and if I buy bond, and the bond rate yield is right only 2%, then CPI is higher, so I'm losing value. Look at the gap. Last 20 years, always the inflation is always, the brown line is always below the yield rate, right? Which is inflation rate, right? I mean below the Fed rate, yield, below the yield, right? Blue line is always above the inflation. But now inflation is flying high, so people who already bought it here bought these 2%, 1.5% yield rate. So they are losing right now. Look at I'll show you right here. I have this probably here also, yield right here. So those who bought it like let's say 30 years. Let's go to 30 years yield. No, not yield. I want to go yield. 30-year yield right here. So people who, look at this right here. Okay, so now we are way here. We used to be here now they are going to climb the yield. Right here is going to climb the more the yield goes up, the bond value goes down, because who's going to buy that bond? Because they are already losing, because those who bought the bond, they are losing the value. So which are the bonds are 30 year right here. These are the bond. This is US 30.
Can the government control crypto the same way?
Crypto will be different game. Let's not talk too much on crypto today, because then there'll be we will not have much time. So let's not talk right now. Let's go back to our things. People are more interested into how to trade basically, because what I notice is many people have questions, because say, hey, how can I be a profitable? And I notice that people do trade different styles, and the people losing money. So my goal here is to not to lose money. If you don't make money, is fine in the beginning, but you have to make sure you don't lose money, because that is your confidence, that's your foundation. If your foundation is weak, then you won't like stock market, because you think, man, this stock market is not for me. So like what I tell you everybody is this guy. I mean very simple, I'll give you example. This is how I think in the market. So it's like when you go and date a girl, or girl go and date a guy, right? And how would you know the girl or guy who is good, right? Unless you go and live with them, right? And then you come to know real colors of the life. Same thing applies here also. So when you want to trade any stocks, you have to apply just like you're dating with the stock. So if you want to jump in, if some event news come out and say, hey, Elon Musk buying this, Elon Musk did this, and you jump in and you buy the stock, or you buy the options, or mostly options. Forget about stock, because mostly people we do is options. So people buy options, and then at that time momentum is there, and then you holding, you think you are that stock gonna fly to the moon, and then after 1 or 2 days the implied volatility goes down and option value goes down, and then people holding the bags, right? So this scenario happens with the people, but people do not know, because some people do not know how to take the profit, right? So what I teach is there is a different traders here, because everybody cannot be Josh, or everybody cannot be whomsoever, whatever they trade, right? Everybody likes to be different. So what I teach is you need to know yourself first. So for example, day trade, right? When it comes to day trade, and in the day trade also these are levels of trading. When it comes to scalping, right? When I scalp, when I show you some SPY trading, then you would know how I trade when it comes to SPY, and I show you here, and then many people trade. But again, there are people who are listening or watching the video, and they just try to do the same thing here, but it's a microsecond difference. And because we are playing the candles, we purely playing the supports, and purely we play with our trends. When we do live trading, you know how I trade. So when we do, many people trade, but then you do not want to get excited in the day trade, because this is a stream. We stream live. When I stream live, people get carried away. What I like to tell you is this, guys, you do not want to carry it away, because that's the when you try to date a girl or guy, whomsoever, right? You don't want to go and immediately think, oh, I'm gonna go and marry with this and that's get ready, right? You need to test yourself. So first, what I would tell you is this: you understand your how you are, what you are. Are you a day trader? Are you a scalper? Are you a swing trader? Are you a long time trader? Because if you try to do different than what your genre is, then you will have a difficulty, because that's why you're gonna lose the trade. So if you want to learn something else, then what you do is, then what you do is you make your, when we want to jump in the water, we always go with the one word, test the water, right? That's what I would tell you, that test the water, don't go crazy on it, or just stick to, because market is wide varieties, and you don't want to jump in every bandwagon, because you think I'm missing that. The missing FOMO when you have, don't trade. Don't go crazy on those kind of things. You try to go easy, guys. So somebody makes money on a day trade and say, I'm gonna jump in, I'm gonna make money, because that's the bad part, man. I have seen that. And that's why if you do not have experience, 5 years experience trading, then only go and trade day trade. Otherwise you're gonna lose everything you have, guys. If you do not have a proper support from something, you're gonna lose all your, if you're gonna do day trade. Okay, day trade is very risky, and that's because when you do day trade, you're gonna play double. Because you lost one trade, and you're gonna say, I'm gonna recover. That's our that's how fear and FOMO works. So I like to mention here, everybody, when we go live, don't simply jump in the day trade and trade like that, because that's very dangerous, guys. People gonna lose money. But some people have experience, right? So then they trade and they will not lose money. But people, so I would say 90% people lose money in a day trade, guys. Very, very difficult day trade. Okay. So my advice to you, start with a slow man. Start with a swing trade at least, and then swing trade is your buffer. So when you buy option swing trade, don't go crazy on buying immediately. Say I'm gonna buy, I'm gonna make money, I'm gonna make fortune. Test yourself. Test yourself. Say, hey, I'm gonna try this, one option and see how my thesis is right or not. So you don't have, when you have to go with the every stocks to keep jumping in to find the locate a stock. So I like to show you something, and then you can see how you want to trade like that. So whenever you want to trade, if you don't want to trade stocks, jump, because you don't know, you did not date that stock, you don't know how that stock gonna play. But the moment you date, then you would come to know how. Then you would come to know that he or she is lazy, he or she is addictive to something, he or she is, you know what I mean, many weaknesses or good points and bad point you come to know, right? That's the most important part, I thought. And I thought, let me discuss with you guys that when you want to trade something. So for example, I'll show you here. So let's say QQQ, right? For example, QQQ right here, right? So QQQ, you see the cycle goes, right? Every time it's not a straight line, right? It's not a straight down also, right? It always cycle. So here is a bull, then again bear, then is a bull, then there is a bear, then could be bull, could be bear, something like that. It goes every day, because I mean, this is how the cycle normally goes. Only thing is you need to find your zone and how you want to trade with it. So in this scenario, now if you keep trading QQQ, or if you keep trading, say for example, I like SQQQ, right? So SQQ is the inverse of QQQ. So what you can do is, because this is lower range right here, right? So you can buy a call and put. But once you start trading in this SQQQ, that means you are dating SQQQ every day, right? When you start trading these, then you would come to know. What you would come to know? You would come to know many things about their premium quality, about their options. You'll come to know about their hold on, let me show you, for example, here. So I'm gonna bring the options here, so you would understand. For example, SQQ right here, and you can see here, you would come to know a lot of things every day. You keep watching and you wanna see how many open interests are, how many volumes are. You will come to know what the volatility is gaining every day. You would come to know what was the low today. You would come to know what is delta going today, tomorrow. Every day you would come to know. You would know the behavior of the particular stock. You know what I mean? This is what I'm talking about, dating. So when you date this stock, you would exactly come to know every day, because you now know. If you are in this game every now and then you exactly know how to rake the money. You just, when you buy option for a 1 month, remember, you do not want to do day trade. Day trade is very dangerous, particularly unless you become master. So I do not right now, but try to learn, make your foundation stronger, and then you grow over, right? So that's why this is just I'm talking about technology stock, right? There's a bunch of other ETF, other indexes you can play with it, and that I can show you right here also, so that you would know. So for example, if you want to play safer, you can go to exchanges, and we can have this one right here. So these are all ETFs. These are inverse ETF right here. You can play any of these, whichever you like, whichever field you like. You like healthcare, XBI right here, IBB here, whatever field you like. But you like to, before you go crazy or anything, just try to date these stocks and play with it. Then you would learn more about these information. Then you exactly know what price to pay. Then you would know what time to exit. When you keep doing this, you would have a fun. So if you want to stay with, don't need to go everywhere. There's a lot of headline and tweeters, and lot of things will go around, noise and all. But that is how would you know that is a good girl or good guy is, right? That's the reason. So if you want to try with that options, try that, and that way at least you will come to know the behavior of that particular script, whichever you are playing. And you would have a better option, because bottom line is your goal is what? Green, right? Your goal is not Tesla or Apple or SQQ or QQQ, right? Your goal is to make sure you make the money, you don't get wiped out. So same thing here. So if you want to if you anything you want to pick, the bottom line is is market, bottom line is how much you can make money out of it. So if you like semiconductor, you can play semiconductor. So for example, I'll give you idea. So if you think market, now what is SQQQ? For example, SQQ is inverse of QQQ. If the QQQ goes down, you can buy SQQ calls, right? When the QQQ goes up, you can short this one. So you can buy a put. You can buy a put, right? So if you think QQQ gonna go down, then buy a call. But if you think QQQ gonna go up, then you can buy a put, right? So then you come to know about how these things are, how to play, and can buy a little 1 month away from it. The further, because I understand sometimes you think, oh no, let me buy because this cheap right here. It says is 1 week, but 1 week is you're paying premium. You're paying less premium, but risk is higher, right? Because they always look at the cycle here, like QQQ right here. When QQQ happens, cycle, bull cycle, bear cycle, like that. So cycle, you want to catch from the top when the QQQ flying high somewhere, and then you think market gonna go down, then buy a 1 month process. So at least some point of time you would know, and then when you see your 20-30% profit, take the money, right? As long as you see your green profit, market gives you opportunity, at that time you take the money. But you don't want to buy it here, and when you don't want to buy market is flying high and you want to buy SQQ here, then it's a problem. You have to buy the put inverse. Remember, inverse, right? So when you buy the put here, you're going to benefit because market is going down up. SQQ is the inverse. Same thing. Just need to understand how to. You can buy a QQQ, but the QQQ call would be expensive, right? So you can do either way. You can do that also. I'm not saying no, you can do, but then
Wait. Are you saying the QQQ call is more expensive than shorting the SQQ?
Yeah, so these are all leverages. So hold on, let me explain you right here. So if you look at right now, QQQ is look at the April 13, and QQQ call is only daily, like every other day, right? Look at the daily calls and puts. Market maker mint money. So if you go 14, how much money you pay? Look at the QQQ calls are. Look at that, $5 calls. So again, you make money too, but then look at the theta. Look at that, 59 cents theta you're gonna lose every day. So that's why I do not recommend QQQ for people who are, you gotta go slow track, which is SQQQ, little safer track, because they have a row right here. You can go SQQQ. So this is inverse of QQQ. If QQQ go up, SQQ go down. If the QQQ go down, SQQ go up. This is how you need to apply the funda. So bottom line is you need to know that you will know better trend, how the market is moving around, and then you can play with that and see how it is. You don't need to go and blow up your account. Just go with the 1-1 contract and understand how it's behaving. The moment you think I lost already money and I'm gonna want to make money next week to recover, you're gonna lose all the money again you put it in. So try to learn, because that's where I realize people can make mistakes because people don't have the knowledge, and they simply jump in here, there, everywhere they want to jump in, then they do not know what exactly they are doing, because the option is a game, right? Market maker has a computer, they exactly can see what are the games they want to play. So that's why you want to be little careful here. You need to understand what his options are. If you don't have any questions, you can come here every time I'm live here, right? And I will guide you. Whatever question you have, whatever the question you have, you just please come here and talk to me, and I will tell you what I think about it. And the safety, because this gives you safety and and give you a proper understanding that how we need to go with it. So say anything you can if you like Twitter, you can play Twitter, you can play Apple. Every stock has a cycle, but remember theta is important. You have to remember this. You do not want to lose too much theta. So if you want to go in the money, you have a less theta. So if you go in the money, you have 14 cents, right? But you pay higher premium. So when you start playing with the stock, you would come to know so how to play with it.
Hey Josh, I have a question.
Mm-hmm.
So first, before my question, I think the futures went from positive to negative, like 60, the Nasdaq, after the yields went up the 10 years. So my question, I did ask you about Shopify last week. I don't know if you remember, and you had said that you thought it was too expensive. And yeah, I wish I listened to you because I just stayed in the position and I just got slaughtered like big size, big time.
Oh, you were, man. Man, Shopify super expensive, man.
Man, I had a lot of shares, like few hundreds, and I got really wrecked. 'Cause I
Really?
bought it like at $700. Yeah.
Oh, yeah. You've been asking me about the Tesla too, right?
Yes, I did ask you on Tesla in the past when you had a 580 price target on it.
Okay. Gotcha.
When did you enter that position?
I entered at 696, like
No, what time frame?
just like what was 2 weeks ago or 10 days ago or something.
And it was shares?
Huh?
It was shares?
Yeah,
Ops.
I bought shares.
Oh,
Yeah.
share. He buys share. Okay. So
Yeah.
you might be little safe, but again, guys, remember why? Because I'll explain you why Shopify is expensive. There will be a cycle. Okay, always there is a cycle. But I'm super duper bearish on Shopify, and I'll show you right here so you would understand. I don't know. Okay, Shopify right here. Let's take a look at their financial. So Shopify basically you're paying 303 time right now. So Apple is 30 time. If you buy Apple right now, you're paying 30 time. When you buy Shopify, you're paying 300 time value. So you think Shopify deserve to be 300 time value at this point? That's why market maker, they are tanking this stock because they think it's overpriced. This stock overpriced. Why they saying overpriced? Because pre-pandemic price, whatever the revenue is, basically, I know it's not about pre-pandemic price is right there too, but let me see the revenue. Look at the revenue is very low, 1.39, and their EPS is 136. So this stock is let me see that maybe they have a high outstanding share. Let me see, outstanding shares will be outrageous. No, their outstanding share is not outrageous, 114 million. So then look at that, they have expenditure high. Their revenue is 460 billion. There's a lot, but their EBITDA is this like a less than. They are making only net profit is what, like 8% net profit. They are making net profit 8%. So based on this, based on the revenue, based on this revenue, their price is outrageous, 303. So somebody pumped up this stock a lot in history. That's why this stock is high price right now. So this stock, if you ask me what is the real price supposed to be based on my analysis, based on their earning per share 136, and now what they are expecting next quarter 71 cents, this stock deserve to be around $100. Believe me, you're gonna laugh at me, and Josh, you crazy, this and that, guys. But believe me, this stock is outrageously, and that's why it's losing the ground. Look at this; it's all pump, guys. People pump, and now look, dump, and you are only holding, you're holding hope here.
You know what, George? You could be right, but the thing is, this usually doesn't go straight down.
Yeah.
Like it is now.
And that's actually was going to be my question, Sigma.
Yeah.
That's exactly my question I was about to ask. Do you guys see on the chart any chance for even a dead cat bounce? So I just get a better.
No, right now I don't see anything. Right now I don't see anything. Right now market need to today. If the market change, believe me, that's why pressure is high. This was look, compare this right here, this run up right here, but look, got rejected right here several times, like 12 days we rejected right here. Market took off. This stock did not took off. Why? Because it's expensive, and now it's double topping, is 100% heading down. This stock, even market will go up, this stock will not perform good right now because it's outrageous price. Nobody wants to touch this. I mean, the institution they can see exactly what it is. You think they know everything. They have a software. They look at that. Show me the forward PE ratio which is less than 50, 30, 20. This stock not even come in the list to buy. That's why.
I guess I'll flatten the position as soon as I wake up.
That's guys, okay. Look, I like to help people to analyze. Please do your due diligence before you take any action. Because every time there's a green candle, red candle, and then if you see a green candle, you're gonna say, Josh, you crazy man, I lost my money. So
okay, but looking at the chart, like I know it's setting a support, but that's a very minor support, and I know that the 520, 565 area has a much, a little better support. Do you see any support coming up that could hold?
But right now the clouds are getting darker and bad coming up as the time goes nearby, and this company is not producing product. They are all into the digital credit and all, right? So consumer market maker, they want to reduce the power from the people. People should not spend more money at this time. That's why we have a problem, supply problem. They want to fix the supply problem. So in order to fix, they do not support this kind of company right now. If you ask me, this is how I think. How market maker thinks, how politician thinks. You have to think what they think. You can't just simply think what company doing at this point. Clouds are changing and they're looking weak right now. That's why I don't support this company at this point, and that's why people had a power here, right? People had a stimulus money, so stock was flying high, and people pump. And I told right here, that time I was not on Twitter, but my WhatsApp group, my friends and all, I told them their stock was $1,400-$1,500. I said this is gonna break. And look, and then this is gonna go down, and look at that constant going down. So people are holding hope here, and market makers, they exactly know what's gonna happen to this stock. And I'm telling you, the way the market become more and more weak, these stock will become the bigger weak, because that's why look at that. That's what's happening. So again, please guys, always look at look around fundamentals, look around the geopolitics. Don't just look at the stock. Shopify, somebody says Shopify will be these, Bitcoin these, they're gonna accept Bitcoin and it's gonna go fly and all. Man, no. All this means people create a different headline to benefit.
What's up, Josh? What's up, Sigma? Josh,
hey, what's up, man?
I sent you the data for shop if you want to look at it.
Oh, did you? Okay, let me take a look at it.
Is there something, Dave, you would like to add on Shopify that you see that we did not talk about?
He's pulling it up. He's going to show you.
Yeah, so right now, if you look at it, almost Shopify has a lot of shorts. Look at that, people betting on puts, all red. Only two calls, only 79. But look at the 364,000, almost $250,000, more than $250,000, then $500,000 somebody betting on. Oh wow. So people are.
Josh, if you look to the right, you see it says opening, and one is 1 times 5 amount, and one is 5 times amount.
Yeah,
look
right.
To the right. Yeah. So those people are shorting it also. More than unusual calls.
Yeah. So those are dark pool. Yeah.
How's it going?
So these are dark pool records, dark pool data, and if you look at this dark pool data, he pulled it over, and you can see these are the puts. Red means puts, and green means calls. You see yourself how many calls are, and look at what exactly happening right here. Expiry date is, look at this expiry date. This expiry date is June, and this is July. So they are expecting this stock go to 580. But it can go more also. They will benefit out of it, but they
How
invest.
do you know, Josh, like if the put is just a regular put or it's selling a put? Because I did see a $1.7 million put on
We
Shopify.
check right now. Okay, we check right now. So June 17th, right? June 17th, 605 strike price. June 17th.
What's up, Sigma? I didn't want to cut him off.
Not too much. Did you get your newsletter or your article that you get from what's his name?
Yeah, I did, and I have a buy and a sell list. But let's see if he's ready, or if you want me to send it to you.
Yeah, if you want to send it to me, whenever the time is appropriate, we can go over it.
Okay, let me see. What was the strike price? Was 6? 06. What is it? 605. 605 right here, right? 605. Let's go here. 605. Right here. Put. Oh, 605 June 17. Okay. 1 second. Let me see. Expiry 0617 605 580. Let me see 580.
You see what time it came in at 3:32.
No, I don't see. I mean, there are some, but they're not a big quantity. If you multiply by that, I don't think so. That comes out that value. Open interest. Let me see how much value comes out. I will
Because
calculate.
I did see someone shared like the $1.7 million put that came into the system on Friday, and they said that they were selling a put at the strike of 580.
Yeah, the value is there. Okay, right now $1.5 million somebody invested total. If I do this, it comes out 1.5 million about this open interest short. But you think this is tiny number? Oh yeah, right here. So this is bigger number 253. That is 1.5 million. If you do this five, so just do this $60 into 253 into 100, right? And that's the amount they paid. So somebody bought here at $60 into 58.95 into 253 into 100. That's the premium they paid. So it comes out 1.5 million. So more than that people have bought. Yeah, so he's right here. So somebody did invested. So he invested here 496, but then other people also invested into here too. This is this one. Then 605.
So the bottom line it looks bearish to the flow, right?
Yeah, right here the red is only two people are bullish, which is maybe there could be a hedge also.
Josh, I found it in my other tool too. I see a 605. You want me to send it to you?
That's fine. We already saw that. That's
okay.
Fine.
Okay, last question, Josh. I really appreciate the time that you take to answer the questions. Really appreciate it. Last thing, any thought on China stocks? Is that something you look for? You wait, for a certain price to get in?
Yeah, which stock you talking about?
I'm talking about NIO and Baba because Baba's super cheap.
Now what happened? They are out of the gas right now, right? So it's like you want to buy a stock and hold it long, or what's your strategy?
Yeah, I guess I'm looking for I did lose a lot of money on the and I did before that lose on PayPal too. So I was looking for something maybe to hold for a quarter or two, maybe mix that money back or some of it.
So you said you lose a lot of money, so you have printing machine at home and keep losing money?
I did.
Just joking. Okay, I didn't want to embarrass, but what I feel is, guys, this. Okay, I think I understand. Everybody has their balance sheet, but bottom line is why don't you catch a flight which is look like a going to the destination, such as everybody need agriculture, right? That's what I can see, right? Mineral. Elon Musk said that, hey, I need to buy a mining company. Why he's saying like that? Because he's feeling right now pressure. So don't buy Tesla, buy mineral. Buy something which is everybody needed. Buy something which everybody will be needed. So right now what I think is commodities, materials, metals, all those things is, I'm not saying buy oil. No, don't buy oil, but buy commodities. Commodity is good, material is good, metal is good. Now government announced for the gas they need, because right now they are planning that, hey, we want to boycott completely Russia from economy. Just to let you know, guys, Venezuela was the world richest country, right? You know that Venezuela
Josh, I have a ticker when you're done.
Okay, so Venezuela was the richest country on earth, if you know that, guys, and then now it is the poorest country on earth right now in few years. Why? Because we sanctioned them lots and they become poor now. Same thing happened with Iran also. Now Russia turned. You watch my word, what Russia will happen to Russia, right? So we, now America is all these countries, they lobby and they're gonna they need a gas now to supply to the to Europe, and probably they're gonna go in that gas line. So BOIL, look at the BOIL, probably BOIL ETF. So bull, you might get a little stable. Look at this turning now. Table is turning BOIL. And I said this BOIL when it was here $60, and since then it's going up and up and up. So stay with this. Look at the trend changing. W pattern right here is flying. It's gonna go to here. So why you want to catch a flight which are risky one like a Baba? You looking for a cheap, right? No, this is stock market. This is not you're not in a mall to buy a cheap, or you're not in a flea market to shop around. You want to buy something where fundamentals are strong. I mean, look, it's your money, man, but I like to guide you the right way, because I analyze the stocks, and if you want to really want to be a safe, then don't follow what social media thinks. I mean, if you have a stomach to hold Baba, maybe if the table turns and America start helping China, and then you know how I think about Chinese stock. America will not help Chinese, and in America is all any country you go, people want American product. Why they don't want Chinese product? Right? So because we create brand, America creates brand, right? So even though NIO has a great company, Baba would be great, but what happened? I mean, China does not want their own company to be celebrity. Remember, over there, Chinese, because they do not want to go be above they don't want to give a power to the company. Government wants to keep the power.
My timeline right now on Twitter is flooded with the lockdown in China of them like bagging up cats and like killing them and not letting people leave their houses again. So I feel like there's going to be some FUD going on in the near future with the Chinese.
We can trust Chinese, man. That's why. So why stay away from it? Just that's what I say. Marry with something where you can date good, man. You know, why you want to go with risky one? You know what I mean? Why you want to go and
Yeah,
Check your man. Check your message.
no, I saw it. Also, hey Josh, the 10-year and the 2-year just went a little bit green. If we can look at the
No, it's too early, but you just give a little time, 10 year, 2 years. We're going to give a time, you watch. Let's give the May month because anybody can control right now. Bond yield and all, maybe little control, but long run you can control, right? That's what I mean to say. So we're going to give a little time.
Also, if you go back into that NIO and that stocks you lost money on, you're going to be too emotional. If it goes up a new stock, you can be...
Look what happened to NIO. Market turn and now NIO going down. So somebody was crying that I sold my NIO and NIO now went to 23. But this is a cycle, guys. This is, look, you know how expensive NIO it is? And I'll show you right now. You know, people don't trust me, but you know, sometimes they see green candle, say, Josh, you are wrong. No, man, I'm never go wrong, man. If my fundamentals are there, I would stick to my fundamental because that never lies to me. So look at the NIO right now.
When you're done with NIO, can you look at WPM?
Yeah, I'll definitely. So let me right now finish with because there's a lot of NIO bulls are here and I need to bring them to the ground. $1.67 billion outstanding shares, right? This is the startup company who has a 2.67 billion. Now, any company you start up would have a 300 million share, 100 million share, 200, 300, 400, 500. How many billion? B as in boy, 1.67 billion. That means they are outrageously priced. So even if I go with the 300 million count, normally company has a 300 million. So how many multiply I have to do? You are paying $120 right now NIO prices. If I multiply by 5, because you divide by 5 here, right? Then comes out 5. No, not 5, but 4, maybe $100. So NIO is right now you're paying almost $100. Okay.
What do you using to get this multiple?
No, I'm using my mind that if you do 300 million share, right? You apply your brain, 300 million divided by, so 1.67 divided by 3, how many times it becomes? 300. So 3 for 6 or 5 times, right? So 5 time value, look at here, is $100. So you are paying right now $100, but people think, oh wow, look at NIO, it's cheap, it's $20. No, you're paying $100 because somebody's pulling you. They have diluted this share. Their share has been diluted heavily. If they go and burn the share, then I understand. But right now, if they go and dilute, the stock become more cheap because they have to share the pie. Their revenue is being shared. They have to share with them because they have this much revenue. This is in Chinese yen, okay? So when you share, you got to share with this many shareholder. When the more the shareholder, and this is the revenue. If they share, that's their earning is negative. They are losing right now. Look, they are losing 10%. Almost 8% negative right now. So okay, they're gonna make money in future. Let them perform. Give them a couple of years. That's why market don't like this. But if you tell me in the market, people, everybody talk about NIO because there's a lot of people have agenda driven clickbait. Everybody has a different things going on, and people jump in the bandwagon because they don't care about you lose or not. I care about if you lose. Okay, I'm telling you guys, I care. That's why some people, you are a bullish, right? And why would I say bad about the company? If I say good, you will love it and you're going to go and like my videos and you're going to tell 10 people. But no, I will tell you what I feel, whatever I see, guys. So that's why I prove it to you guys. And that's why this NIO is getting rejected. Not even tried this resistance in the bull cycle. Now watch. So that's how this big institution, they're not going to come and tell you how they analyze the stock, but Josh is coming and telling you why NIO is expensive. Now it's up to you, you take it or not. But when the market cloud changes, when condition change, when the cycle change, this stock can go to $10. This stock was $1.89 and I told my friend to buy it, and many people are still holding. Some people sold it, some people bought it, but just to let you know. So it's all about how you take a look at it. Don't be a bullish. Find everything. Look at every surrounding, and then look for if you want to save your money, then just analyze everything, or come here, I analyze it, then you do your due diligence, and then invest your money, then you make money. Otherwise you're gonna keep losing. If you're gonna go to the social media and just buy because you have a lot of money, it takes money, you lose like these guys. Your account will be
I just had someone ask me something about oil. They said look at ticker IEO.
No, hold on. Dave asked me before I jump in Sigma. So Dave, what was the ticker symbol?
WPM.
WPM. Alright guys, and okay, so WPM is on a breakout right now, and WPM is looking good. So if I look at this, well, look, is WPM is getting W right here. So you see the bullish sign right here, right? So somewhere it can go to here probably also. So it heading to 55, 56, 57 area range. And what do they do? Let me see that. Man, what happened to this company? What?
Gold mining company.
Huh?
Precious metal. Gold mine.
Precious metal, Wheaton. Yeah, this is. But look, their EPS is very teeny mini, 29 cents. Okay, so they are going to be good now in future. 35 earning ratio going to go higher. They said 278. So maybe they will benefit now 100%, because their forecasting is great, and the reversing this divergence. So yep, it's heading up slowly it's gonna go up. So I would prefer this, because they are mining company, and if they precious metal mining company, beautiful. I love this kind of. So now if they perform good, let's take a look at the WPM. Their balance sheet, slowly they are right now going to benefit. Look like they are in US.
Canada,
yeah.
Canadian company.
Yeah, so right now look at their $853 million. So you know how much money their net profit is. 80% net profit they are making right now. 80% net profit. So their profitability is great, but their outstanding shares are 450 million. That's why they are a little bit taking time. I mean, is a price is not there, but yeah, definitely this, I love it. I liked it. I would put it into our bull list also. I'll put it in the bull list. WPM.
Cool.
Hey, the ticker is IEO oil.
Hold on.
What is this? Wheat? No, this is metals. Does this look better than X?
Which one?
The one that you're adding right now.
WPM right now, future mineral, right? Everybody need mineral, and we are in these companies in Canada. So this company will benefit a lot, because their profitability is. I like their profitability. I like they're slowly gaining, and I think they will benefit the most. So I can see easily.
This is one of the tickers on the list.
Gotcha. And then so ticker IEO.
But Sigma, don't you think that's looking a bit overextended? Like it had a nice run without any.
No, I haven't looked at it. Somebody's asking me to ask Josh.
Okay, so guys, remember the neckline just broke this one. Okay, so this stock is on a breakout. Is this is long swing term. This is gonna be like, you give about 6 months. End of the year, you will see this stock is great. I mean, it's slowly gonna go. If you want a peace of mind, look at the neckline broke just now. Neckline broke right here. I hope you can see what I mean. Neckline broke, mean to say right here. I'll show you right here. So this is the neckline, W neckline right here, right? So we just broke this neckline right here, and this W. So this is going to finish the W. You watch my words, that you give a time. This is not a day trade. This is not a swing. Just little give a time, because only here we spent 1 month right here. This is 1 month spent right here. Now is about to explode, a breakout. So it's looking great.
Josh, I have a next ticker, AEM.
Hold on, price target. I will add this one later on. I'll put it in our okay, which one it is?
AEM.
Yep, nice breakout. Look, we already did this AEM and it's on already breakout. Now again wants to break out. So there is something is cooking here. Dividend paying company, 47.57, $1 billion. Man, 48. Why they going down? Earning, but now what? Oh, let me see AEM. What do they do? AEM. Canadian, this is mining. Man, you love mining, huh? Now, yep.
I told you I was gonna look for mining companies.
Yeah, no, good. Yeah. That's where you need to be. Look, even Elon Musk is shouting, man, I need to buy. He's afraid that how he gonna deliver cars. This next quarter will be horrible. He will have a difficult. It's not about money. It's about like how much. He is not able to deliver the car. He cannot manufacture the car, because he is having difficulties, and he said that this last quarter was the toughest quarter in a whole lifetime, because there is no supply constraint. He is supply constraint, and you need when you want to build a car, you need 100 vendors. You don't have one vendor you depend on. You depend on 100 vendors. One vendor doesn't support you, you're in trouble, right?
Josh, look at gold also, GOLD.
Yeah, gold is
the mining company.
So gold is a long run, but we need support from market makers. So this one is EBITDA 1.7 billion. So yeah, this one is also making 50% net profit. Yeah, this is good too. So AEM, this company will benefit, but just give a little time. Slowly. These are all slow pace. You will benefit. AEM. I think we have this in our list, no? AEM. I'll add it up.
Sure. ENB also.
AEM. Oh, we have this one already in our list. Okay. This is already was in list. Okay, well, which one you said next?
I said EMD.
EMD?
It's a pipeline.
Emerging market, the Western asset emerging market?
It's emerging in Canada.
I could not understand very well. Maybe sound call.
It's ENB.
Am I typing right? Inbridge?
Echo Bravo. Echo November Bravo.
Oh, okay. Echo November. Okay, ENB right here. Okay, great. Wow, look at this. What, this oil company?
It's a pipeline.
Pipeline. Okay. But which pipeline? Where?
It's Enbridge. It's in Canada.
Canada. Yeah, they're good. They're minting money, man. That's why breakout. Look at the breakout.
They're trying to go into the States too.
Yeah. Long run is good. Definitely good, going good, but it's too much extended. Now it can pull out sometime, then you can enter if you want to. But yeah.
Gosh, look at LPG.
Oh, hold on, slow down. There's a guy, lot of requests on YouTube also. I need to just give a little time. Hi Josh, your view on mode 18 year last Friday. Josh, ready to go, man. Which one? Zahir, Khamir, Walmart, Costco, Dollar. All these are good. Walmart, Costco's. We talked about last week on these. They're going to be recession proof, and that's why people already started buying the Walmart, because when recession starts, in slowly buying power, people will go and buy a shop Walmart, because everybody can buy cheap. They're not gonna buy a Lululemon and all. They're gonna go to Walmart and buy the clothes or grocery. That's why Walmart, Costco will benefit, and they are good. But again, sometimes something overextended, they pull back also. Remember that. So entering new thing, you got to be very careful. Could you please check gold? Yeah, gold is on breakout also, but remember market makers are a little bit pushing down this metal. But gold long run, I'm super bullish on gold, man. When the market dumps, that time you watch the gold, you will see. Okay, gold long run going to be great. Okay. SOXL is, somebody says Susan Eloy. SOXL is finding the support right now here, and we need to wait for the bounce here at $27 right here. $27. We need to wait for the support, and if that bounce, then little bullish. But at this moment, I guess SOXL, you remember pre-pandemic level, we were here around $20, and in pandemic was $3. So this give a little time on this SOXL probably, but it's like a market maker doesn't want this SOXL to go up or semiconductor right now, but there will be a cycle. So they've been shorted whole 10 days, and now they might buy back because they have to buy back, right? You can't keep sell, then they have to buy. Like look, short, then buy, then again short. In the middle they buy. Like look at this big green candle. It can happen some point of time, but I would not right now. Believe me, right now time is not. I'm not going to be semiconductor crazy. Temporary, yes, maybe because we've been selling. But look at the on the CPI data comes, and then the bank earning comes, and so just be careful little bit, guys, now on semiconductors and QQQ stocks. You know, they are highly inflated stocks. So
hey Josh, you remember I was talking to you regarding SOXL on Friday. I got 400 shares assigned at 28 strike price. So should I keep it out tomorrow early morning or still keep it?
No, I mean man, you have a share, right?
Yeah, I was having $28 call. You remember Gopi took that and I just copied his trade. But for same day, Friday, the price was above 28, so I got 400 shares assigned at 28 strike price.
So you have a profit, or you don't have profit right now? You sold it, right?
My cost comes to 28.40, and right now it is at 28.20, 30 somewhere. So not much, only $40-50 down.
Okay, so right now we are at the testing, right? So what you have to understand where how far you want to go and how much risk you want to take. But we have major support. Last support we bounced from here, right? So again, yeah. So again, you are already bought it at the bottom. You need to wait for it, or you want to break for it. It's all up to you how much money you want to take a lose. But at this point right now, we need to wait tomorrow morning how the market looking like. If the way I look right now is market already feeling the pressure, guys. Because when I look at the things, yeah, I feel the pressure is on, and but again, I don't know. We are right there here, guys. It can market maker has to buy these some point of time, because last 7 days they've been selling. Yes, 1, 2, 3, 4, 5, and on 10 days he's been selling. So at some point they have to buy. Maybe this is a support, but again it can go one red, and maybe Tuesday con pop, but Tuesday CPI data coming. So I mean the clouds are not looking great. That's what I can see right now. And market maker has no intention to bring this sector right now up, the way I see right now. But we have a new week starting now. Okay, so then in new week they probably morning they open up and down, and then can go up. So it's all up to you. You want to take a little longer or to wait or not. But if this support, this is what I can tell you right now. Right now too early. This support breaks, then it can go down. If this support can bounce, remember this bounce right here, you saw that bounce, it can bounce also because it's oversold also. That's why I would say we have another $2 to check, to wait and check, because we did not rebound. Okay, we did not rebound, so it looks bearish right now. Remember, we look at the divergence right here, we're still going down, so we bearish, but I want to wait for the support. That's it. So you might can go $2 down. It's up to you. Or if you want to get out of the game, 20, you can take a 20-cent loss and move on. So then you are riskless, right? This is what I move on. But then it bounced the green. Then I don't repent, because it's risk versus reward. How much you want to take a risk? You want to catch another flight, which is good flight. You can catch a good flight. So it's up to you. I mean, right now it can bounce also.
Hard to find a good flight.
No, we have we already discussed. Like, look, we've been talking about all this agriculture also. ADB, right? You remember DBA, right here. Look at this DBA, right? Look at this breakout. We've been saying here is going. So there are many things. Agriculture, mineral, mine. Look at Rio. Look at Vale. This peace of mind. This company, they slowly you're gonna grow. You're gonna pay you off. Then Rio. Look at this Rio. These companies are great. They're minting money. So a company like this, so at least their foundations are strong and the demand is high, and long run 2023, 2022, this company will benefit out of it. You have to look at our bull list, and there's a bunch of companies, agricultures, fertilizers, then like X. Look at this X also, they benefit too. Look at this. When he was here, we were told that Now X is slowing down and gonna come back again, because material will not die right now. Everybody needs material. So, and market is not looking good long run. That's why I would say this, everybody needs mineral and materials. Hard to find.
Hey, Josh, I have a question. I've just recently started listening to you. I'm going to kind of divert away from the minerals and all that sort of stuff. United Health Group, they have been hyper growth since like we've almost like a little over 60% growth since the beginning of COVID. They continue to grow. They've been acquiring a lot of health companies, opening up.
What's the symbol?
U as an umbrella, N as in Nancy, H as in Henry, United Health Group. Their earnings are this week, and I'm thinking of I don't usually play earnings, but I'm wanting to, but I wanted to know your thoughts on it.
It's a parabolic move on this one. So what happens is earning is this 4.448 earning per ratio, P ratio. That's EPS is good, 73 billion. Wow, and they're giving dividend also. Wow, $1.45. That's good. And then 536. Wow, look at that. So their earning per, they are expecting EPS also good. So if I go back to here, this is a parabolic move. So if I go back to here, what was it? UNH. So okay, when it comes to UNH, they're earning their forward P ratio 23 times. 23 times is good. Then look, revenue is $287 billion, right? That's good. They have outstanding shares 940 million, 940, almost a billion. So that is little bit more comparatively, but then EBITDA is 26, so they are making 10% net, almost 10, less than 10, 9% net profit. Okay, they have a lot of expenditure involved in probably, but the debt is 50 billion, but they have a lot of cash also, 23. So you know, the way I look at this now, okay, based on their EBITDA, I did not like the EBITDA because their revenue versus EBITDA is very low comparatively. You know, so 10% is 28, this is 26, so they are basically 8-9% making, but they have a huge revenue. Okay, the EPS is going, so if they're gonna gain what they are showing here, then yes, definitely the stock looking great. But again, these, remember, the market maker, they always try to price in, so the stock can, how far it can go if they want to run. I can go Fibonacci probably a little bit here.
Josh, on Friday, a call came in for UNH at 15:32 for 1.6 million. Check your option flow.
Yeah, because that's what it looked like to me, but it's, you know, you have to check the flow tomorrow. But yeah, if this stock has a potential to go, maximum can go up to $600 also, but this is Fibonacci. Okay, I don't trust Fibonacci much. This is projection that how far it can go. So next it can go up to this also if their earning go, but market is all to the market maker. Why? Because stock is still little cheap. So but again, based on this, I would not play. Based on what I think is, there's a huge demand for it probably, and people wants to park the money where excuse me, where the company making money. So this company makes money, good money. So yeah, it deserves to go up because still forward P ratio is low based on their earning, 23 times. How far it can go, I would never suggest anybody to play earning. That's my nature, because earning is a gambling, because we don't have steering wheel in our hand, and market maker tanks because we just got this 4 candle up, and when everybody is bullish, and then they tank because most of the people, how market maker makes money, when you become bullish and you buy calls and then they tank, they go opposite, then only they make money. So that's another side of the things I always look. I always think other side of the coin. I don't just look what I like. I also need to think what they will like, because who's selling the calls? Market makers. So that's why I hate playing my earnings, because I don't have a steering wheel, and unless you have a 1 month far option you buy, or you know, safety. So, and they're already parabolic move here too. So that's, I always like to have a security when I trade something, because look at the parabolic move from here to here. It was 450 and now it's 550, and then some people become super bullish and they say earning coming, you're gonna make money, but look, the price in already. So that can happen too. It's a one scenario. Okay, I have to look at the what market maker thinking, because of the lot of calls in it, many calls. They think, okay, I'm gonna go opposite direction so they can break the premium, right? They can make a lot of money on premium. So you got to see both sides. So that's why I don't like I would rather save my money. It can go here, but I don't give any financial advice. Call is your definitely strong foundation. Love the company, everything looking great. Only thing is, you have to check yourself whether you want to play earning. Is just without steering wheel, I'm driving to the destination.
Got it. All right. Thank you so much.
No problem. Thank you.
Hey Dave, how do you find those stickers?
Which sticker?
The
Gave him a lot.
The gold and the mining ones you just gave us.
I can read you the newsletter. I'm pretty sure they're in here.
So
Give Josh, let him finish first, and I guess when he's ready.
yeah, so she was asking about the call. I mean, I just want to give you example that, if you can see here on a computer, that look at the call volume is there is a call volume there too. A lot of dark pool data. So somebody bought $21,000 calls on 575. Somebody is right here. So there are some people are expecting that this stock can go to 580. Right here. So 580 is the bigger number somebody betting on. But again, somebody knows something, right? It's about risk versus reward on the United Health. The company long run is good. Long run I like it. Long term I like that. Okay, somebody said about SQQ for next week also good. I would, Susan, I do not like to play SQQ next one week because it's a risky. I always have a buffer, and then whenever you see 20-30% profit, and whenever at the time, then you take the money and close the call. You don't have to look for the time how much left. But buffer is important, always buffer, because that's where we get washed out when market maker go opposite. Remember, somebody selling and you're buying. Somebody need to win. Either you win or market maker wins. Who wins? Who you want to win? Do you have a power, or market maker has a power? It's like that. So you have to think other side, how they want to trap, how they are setting up a trap. You have to think that also. If it is a big chunk of the money, they will set up a trap, but with small them, they don't even care about it. So just little bit, always have to have a look at both the side. If the moment you become your side and become biased that I'm bullish, then also we'll lose money. So we have to look other side also, particularly buying options and all. Okay, so Excel Zim. Yeah, so Zim support is $56. I guess that's Zim has a never ever tested. One second. Zim never tested 200 moving average. Right here, 56 support. So I have $55-$56 support, and I was reading over the weekend also that the transportation, they're gonna be minting money also on this time too. So these people will benefit here too. So this is opportunity because their foundation is strong. $12 EPS, where they're gonna find in this market for $57. This is ridiculously low price. It's just about stomach. How long is a heavily discounted price. But don't buy for a week or 2 weeks. I always like to go buffer. Always have more than a month. Look at their earning is on VAT, right? May 18. So anything longer calls. So that way you have a safety. Buy a little longer because safety is important. The smaller you go, cheaper the option attracts you, but then stock doesn't go up. Then that's why it's controlled by somebody is controlling this. Even though look at that, where can you find a company who has earning per share is $14? Which company expect earning per share is $12, $13? Can you find a company? So that's how I look.
Didn't you close your position on Zim last week?
Yeah, but I entered into to cover my thing. No, I have one position open, but rest all I close it, and I have one position open. Rest I'll close it. And I was I wanted to buy Friday, I guess. I don't know, did I buy or not? Maybe I was trying to enter. I need to see that. But I want to buy Zim, so I was waiting probably here. I want to buy here. If somewhere here tomorrow I will see. But I want to buy this one for I will see how the Zim responds this Monday, because I feel that the Zim would be, this is patience. This Zim is patience, because it's dirt cheap. I like the cheap where foundation is strong. I don't give a damn about market maker dumping right now, because this is the game goes on. This is just the pure game, because they now is oversold and they had to buy back also.
To answer that person's question, how do I find a company? I get an email, and I come on here and share with Josh and Sigmund, and we go over it.
Okay, guys.
Is that a source that you can access, or is there a link for that?
There is no link. I get it. As institutional investors, you can't get that.
Oh, okay. But thank you for sharing.
Josh, do you want me to go over the newsletter right now with the group?
If it's short term, 9 o'clock already, man. 1 second, no, man. We have a hold on. Let me go through other stock people on requesting on YouTube. So I went through Zim and DSE is the same thing. Susan, I think you're asking the same question. I mean, you're always here, so we're gonna wait for it. What UNH is the biggest Dow company? Yeah, you're right. That's the part of XLV. Okay, yep. XLV. Just please compare CVS and UNH. CVS, okay. CVS is great, looking great. CVS is looking great chart. 198, and they're giving even 215. So CVS earning coming, and their earning will be good. That's why the stock is going up in May. Earning coming on May 4th. So let me see, 215, 198. So let me go to check CVS. Okay, the earning per share. So CVS is cheaper than the United Health, but remember CVS is a retail and United Health is different. Let's take a look at the revenue. 290 billion. Wow, that's good, but they have a high float, 1.31 billion shares outstanding. Revenue 290, EBITDA is 18. So okay, so this company CVS makes less money than the United Health, I mean EBITDA. So this CVS makes 5% net profit, and CVS has a huge debt, 76 billion versus their cash in 12. So they're pretty much 6:1 ratio debt versus cash. It's a little bit higher. That they'll be paying a lot of interest. Okay, remember, a lot of interest they'll be paying on too long run. Right now they are fine, but 2023, be careful on 2023. But forward P ratio is cheap based on this price and based on the outstanding shares. So yeah, I mean, so far so good. It can go to somewhere this, but I don't want to go too long on this one. I would try to exit some point somewhere on the top whenever it reaches, and then move on to another one. I mean, sure, because they made a lot of money on vaccine, probably giving it to the people. Now things are changing, right? Okay, so that's about that. Thank you so much, Josh. You are the best. Okay, thank you. I love you too. Thank you. I have staked 50 Matic token, will get 96. Benny says I have staked 50 Matic token and will get 96 on holding. Suggest to invest early. Matic token, yeah, I mean, crypto, I'm not gonna go here right now, guys. But if you have Matic, I like the company overall. But again, that's long run. Okay, it's a long run on that. All right, I have questions on Twitter right now. So I have a request, so I will add some other people. If somebody wants to add, I will add them. Okay, who is next?
Hey Josh, I have a question about the ticker Dave gave, that WPM.
Okay.
I just have a technical question on the chart. I mean, the chart looks like a beauty. But on the daily, when the RSI is 63, is that still beautiful or is that very high?
Oh, okay, this one right here, RSI. Now, right now, what I see here, because right now this company is their earning coming, right? Earning coming in, and they are expecting forecast is better than previous. So my institution, they see this, hey, company is expecting, and now what this product is, mineral, right? Precious metal. So precious metal, everybody needs it. Price is skyrocketing now. and there huge demand. So that's why the company benefiting. That's why slowly is going up. Maybe look like a cup and handle from here to here, look like a little bit. Now it's gonna shoot up and then become the W pattern here also. So cup and handle is like this, right here. This is, you see this, right? Cup and handle, and now it's gonna break. So perfect shoot up too. It takes a little time, but yeah, it's about to happen, guys. Breakout. I love this.
What price targets would you give it if it breaks out here?
Oh, breakout. I'm not gonna play breakout. I don't recommend breakout because it can break and fail and then it can go also. So but I always suggest long term. I do not want to recommend anybody for short term and then market maker tank. You just little long term on this one, because look, whole 1 month they spend here. 1 month just from here to here they spend between $45 to $49 1 month they spend. Now about to break. So there's a lot of people who bought option here. Depends, if you buy high over here you get lose, but now is about to break.
Josh, look at LPG.
LPG, Doreen, LPG, yeah, LPG is great. I mean, breakout setting up.
It's the energy company for storage of gas and oil and delivery.
Wow, look at their earning point ratio. They beat 207% time, 207%. Okay, the small company, right? Dividend they're giving. Okay, yeah, $1 dividend, man. Wow, this teeny company gives $1, and they're expecting earning. But wow, they're expecting great, man. Double now. Great find, huh? Really, LPG. Yeah, this is good one. LPG, I think. Let me see. LPG right here. The gas will, anything with the gas, guys, remember, anything with the gas, man, those company will benefit the most now, because we have huge demand for 2022, maybe 2023, because we are right now trying to corner Russia. Remember, guys, we are trying to, world is trying to corner Russia except India and China, but right now we are trying to corner, and once we corner them, then they more and more sanction goes into, they will benefit, this company will benefit the most. And I think Europe, they need a lot of gas, natural gas. So this company benefit 26 time forward P ratio. Okay, that's fine. EBITDA 165. Oh wow, this company making net, small company, $290 million revenue and 165. So pretty much 55% net profit. 55% net profit. So I like that. And then what I like about most important is very low float. So this company best because they have a low float, 40 million. This stock can jump anytime. This stock, that's why it's flying high. This one, this, love it. LPG. Let me add this. Yep, added LPG, good.
Hi, Jose. Good evening. How are you?
I'm good, man. How are you?
Good. The ticker is JMIA.
JMIA?
Yeah.
JP.
That's all.
Oh, what is it? Is in US?
No, that's in German actually, but that's in South Africa. Like this is kind of Baba, but they are in based on Africa on the online.
Jumia?
Yeah, Jimmy. Yeah.
Hey Josh, how are you, man? Sorry I'm late.
Man, Gopi, what's up, man? How are you?
Good, man.
Good to see you.
Welcome.
Okay.
Good, man. Sorry I couldn't join. I had some family commitments, so sorry, man.
Understand, man. It's a Sunday. We understand everybody has something. So Jumia has a 73 cent negative EPS. Okay, 47. This is teeny mini company. Very teeny mini company. Okay, guys. Be careful on 62 million reported revenue, and now they're going to be 47 million. So that revenue goes down. That means vulnerable, man. JMIA. So this is a heavily shorted stock, would be probably.
Man, that's an avoid list, man. Interest rate rising, avoid list.
Yeah, no, hold on, but I got to analyze it, right? So yeah. So this company losing right now tons of money. How? Because if you look at on your computer, 177 million revenue, but they are spending $231 million from their pocket. So they are basically literally on top of whatever they're making, they're losing more. That means they are expanding their company or whatever they are doing it, but they are losing. So I would stay away from this This probably stock can go to dollar 50 cents, 10 cents, or something like that. Be careful, guys. Okay, don't build any hope on this. That does not mean the stock cannot go up. It can go up again because it's short, short ratio. Then market maker again tank. So this stock is the perfect short to go at $6. Perfect short to go $6, Jumia.
Oh, okay. Okay. Yeah, got it, Josh.
No problem.
So this other ticker is BLDP.
BLDP.
Hey, real quick, Gopi, how you doing, man? I'm gonna send you the ticker Josh went over. I gave him already. Okay.
Okay.
Just check your message in a couple of minutes.
Okay, BLDP Ballard Power System. Okay, $10. Look at the earning per share is negative. Go, man, this company losing money. 37. And when you look at the earning per share and the EPS, and when you see negative, be careful on those company, and they're teeny mini company also. So market maker hate those teeny mini company who is losing money. Now is not a time where any institution, they invest money, then only company goes higher. You and me cannot pump the market. They need an institution buyer only invest money into the company where there is a earning per share is positive. If they are negative, they want to stay away. Only Khyati would need to buy. But do you think Khyati would buy BLDP? No, right?
So this is basically a Biden play.
BLDP.
Ballard Power is an alternative energy.
BLDP. Wait, let me see, but I don't know what they do.
Alternate energy. It's an alternate energy company. I used to play this long time, but right now, stay away.
Because they look at this 104 million is revenue, and they are losing $80 million, $80 million. So I understand is a energy alternative energy, but again, if they are not making money, then you're not gonna find institution. You can find only market maker to help you a little bit, but so right now if I draw the chart, I'll tell you right now what I think. Okay, so this is
if plug goes up, this guy will also go with it.
Yeah, that's right. Yeah, that's what I noticed. Yeah.
Yeah. So it goes with plug. So play if you want, play it, but don't think that you're going to invest and make a lot of money.
Yeah, this is all pure pump and dump. Is just be careful. You need a reversal. Whenever it reversals, right now we broke the support line here. Be careful to enter now because we have 50-day moving average. So you need to watch. If you want to play, but you need a reversal. Then only I will play. Whenever you see the green reversal on this support, then I would play until let it fall. When I see that. Right now it's gonna drop. The way RSI, the MACD is pointing, is going down. Wait until the reversal, and then you can buy, and then again go up, and then again you can ride back. This is all play, risky play. Just remember this. That's it.
Yeah, that's right. Yeah, correct, Josh. So what do you think of Tilray?
Same thing, man. Tilray is same. Everything is same thing, man. These all. Whenever you see these kind of stocks, you got to be in and out. Otherwise, you'll be holding a time. It's same thing. I said that earlier too. I was out right on the top. Many people also out also. But again, then you can hold some.
I'm staying there actually. I don't know.
So Josh, over the weekend.
All right. So answer KRK question. Me and Gopi is in Tilray, and I'm losing money. And I believe Gopi is too. So.
Yeah. So what I did was, remember it went to $8, right? I took a little bit off.
Yeah,
but I'm still. But I had good profits, but a little profit, but I'm still there. But I heard in news over the weekend about Senate talking about taking up a bill in the Senate quickly.
Yes. So it's just a pure play. Play with it and then just exit it, because if you want to be holding that, hey, this stock was $40, $50 and now is this, based on that, then you'll be just holding back and wait for opportunity whenever it arrives. But for me, man, I get squeezed when the stock keep going down. This is I said exactly when this was happening, and I was exit right here on the top, and I just told everybody, and then I enter also little bit play. That's it. Yeah.
Yeah, I was just entered in 8, so now I'm just looking to come up.
Yeah, I think Josh, when he said he picked the top tick, man. Until
I pushed everybody, guys. $9 when it reached, and I push everybody, guys, exit. This is the perfect time.
Yeah.
Because people want to see here, he's gonna go here, but God knows, man. Just take the money and run.
Yeah, that was a very good.
But that doesn't mean cannot reverse, and you can reverse, but then you have to hold for how many months and how many days, we don't know. That's why.
So do you think I can hold, or
What do you think?
Man,
like,
I wish I have a crystal ball, but right now we are testing. We are testing the 50-day moving average, very critical area, and then market maker. I mean, if any catalyst news comes, then you can bounce. So just give a little time because he said the Senate, right? Any headline comes, it might go. So it could be a good.
You watch QQQ, man. It'll go with it. If QQQ goes up, this guy will also go up. If QQQ falls,
Some point it will pay you off. Some point it will pay off. Only thing is how long you want to hold.
Okay. Thanks, buddy. Thanks, Gopi.
No problem.
Hey, Josh, I just had a quick question here.
What's up, man?
What were your thoughts on ticker symbol LAC, Lithium Americas company? Just with the talks of Elon potentially buying a mine, not as the main catalyst at all, but the talks of commodities as well on a potential pullback over the next 3 months for a buying opportunity.
Do you know what this what is the revenue is? Do you know this company? I mean, is it? I mean, I want to know their revenue, and that's why, because it's been. You think Elon Musk wants to buy this company?
No, I don't think that at all. I was just mentioning that you were
So
saying that earlier.
there is no data here on this company. That's what it sometime what happened is a pump and dump happen too, right? So I need a data. If there is no data on it, I cannot trust, because how can I know? I need to know their balance sheet.
Need more information.
Yes, I need information.
What company is that?
LAC is the lithium ion. Lithium America is a company. What I know is this one thing, guys. Okay. Lithium we do not have a lithium. America has a lot of problem about mining, guys. Okay, so we are very limited here. But if you go, remember we had the Sigma friend came by who does big mining and travels worldwide. He was the one who is telling that the biggest mining happening in Australia and Brazil. So Brazil and Australia. So you look for those companies.
I've had conversations with him.
Yeah. So
I've had conversations with him about it.
Mm-hmm.
No, it was with that specialty solution. So if you pull up the balance sheet, Josh.
Which one?
The LAC.
Right here, okay.
1 second. Okay, let's go through their balance sheet.
Yeah, right here. No, there is no balance sheet. There is no revenue here.
Or maybe it was on one of their websites. 1 second.
If you can find something, somebody just give me. Look here also.
The guy he was shitting all over it because of the amount of lithium they had on hand. They just weren't producing very much. I think that's why.
Yeah, exactly. So that's why you got to be very careful, because in the market we all retailers believes in lithium and all, and we go pump, and then they dump also. So you need to find the bottom to pump and dump, and we don't know how far it can go up and down, because if you don't know their production size, revenue, then we'll be purely like we'll be in the play, and I don't want to get slaughtered. So that's what I like to always teach. When you're pumping, you got to exit, and we draw here. When it was here W rook, we draw W when support bounce. And I say perfect, and then you go and then look at this one also, and then now dumping. How far it can dump, we have to see. But if this.
The company itself has run up a lot, and lithium is going to continue to run up, but the mines themselves don't necessarily move in correlation with the mineral because of their production and their balance sheet, as far as how much debt they have, how much they're actually producing, how much they have in stock, etc.
I think Whale is a good bet if you want to play miners.
The Whale has outstanding shares are also, and they're making money also, and Whale and Riot I see, and then they also mentioned today, which is
You mean Silver Wheaton, right?
No, yeah, that one is also great, man.
Oh, Wheaton, I used to follow this company. It's a good company.
WSM.
It's got copper mining too.
No, not this one. Which one? What was it? Which one was it? The WPM, right?
Yeah, Wheaton Precious Metals.
Yeah, Wheaton right here. So these three are great, guys. Just WPM, Whale, and Rio. This miner so far, and
guys, if you want to play the commodity, copper is right now the cheapest, and cheapest among all the other commodities. So copper has a big potential to run 40%. So
do you have a ticker, Josh? Look at this ticker, SCCO. SCCO.
Southern
Charlie,
Copper.
Charlie.
Southern Copper. Yeah. Southern Copper. Yeah. SCCO. This is $1.08, $1.08. Okay. This is 107, 112, and the revenue is not growing. Hold on, let me see. SCCO.
Because the prices are like prices are holding up. It's they are not up to the mark, like they're
No man,
prices are moving.
so there right now forward P ratio is very expensive. So be little bit careful. I don't like to pay 40 time value. That's the reason the stock is not moving. Look at this 40 time you are paying right now. Okay, so if somebody wants to pay 40 time, but their net profitability is crazy, man. They are minting like 70%.
Insiders, Josh, insiders.
Yeah, 70%. Hold on, 70% net profit they have. 70% net profit, man. They are minting money, but all miners are minting. Okay, so what I look at is their outstanding shares are huge, 773. That is also fine, but insiders are holding right now 88%. Nobody wants to sell because long run. But if you look at this here chart, why stock is basically getting rejected at this price, because it's little expensive at this price. Expensive mean to say is already priced in. So I would prefer other stock, which is Dave mentioned.
Josh, look at FCX.
Yeah, FCX is good. FC.
I have another one for you. Let the gentleman go first, and then I'll go after him.
Yeah, man, FCX is good now. Now I need to get rid of this FCX. Okay, FCS, I need to finish this. All these jobs are done, man. With this stock was way low when we found, and now look at this parabolic move.
Yeah.
And now it's going up and up and up. So I want to get rid of a few things, and I will create a new chart now, because we are already done with the cup and handle and all this, right? So what's that? So what happening right now is now a nice curve in here, this stock, and if I look at it, line is growing like this, probably this one growing like this. So this is the entry, exit, entry, somewhere around here entry and somewhere around here exit. This is how I would play. Okay, so this would be the exit zone, this would be the exit zone, right here. Look at over here, got rejected. This is exit zone, this would be your entry zone. This line, follow the line in this area. So no FOMO, don't buy here. You can be market always create opportunity. One time it will create. Everything goes down and up, guys. Remember, cycle. Only thing, patience. Remember. So just wait for the opportunity. I will put a ticker here. I will put alert whenever it happens. Buy. Okay. So we come to know. Okay. So this is long swing term, long term.
Hey, Juice, where I can see the alert, like you said, put in the chart.
I put the alert myself. So if anything, I'm live. I'm live every day, 7 morning market open to do. So if anything live alerts, it ticks on my computer. I get on my text message. But if you have in your computer, you can set it up.
Oh, okay. So, but you said you are putting in the chart somewhere, right? So where I can see the chart, like what's the ticker's name?
Ticker FCX.
No. Like you said, you are put all the tickers in.
No. We don't put all tickers on it.
Oh, okay.
Yeah. We don't put all
I
tickers.
thought whatever we discuss, you put the bullish tickers.
No, so what you do, I want people to come here. Okay, so what I'm trying make it everything free here. Everything is free, and we go through every entire market. And I want people to come here, participate in this, and help the community, because whatever I'm providing is $1 million content, right? But I'm trying to make it free and keep it free. But I want people to help me to grow the community. That's what I'm asking for. So if you need any time, I'm always here, and I always guide you guys, and you can write down.
Thanks, Jose. Actually, good help.
Absolutely, man. Thank you.
Hey, good evening, Josh.
What's up, man? How are you?
Dave, how are you guys?
Good, man.
Hey, so ready for one more symbol like Zim?
Oh, I just went to the Zim. Okay, you want me to go through Zim?
No. I said like Zim, so
Oh, okay. Go ahead. What is
I
it?
was the one who recommended Zim first to you, man.
Yeah. Okay. Thanks.
So this is another one. I did some analysis, but I want you to like. I want
Go ahead. What is it?
Just this is a steel industry symbol, but similar to Nucor, but so the ticker symbol is TX.
TX.
Ternium SA. This is a manufacturer of flat and long steel products.
Wow.
They are in Argentina, Brazil. When you look at the fundamentals, I mean, you can look at P to E ratio or even the depth. It's very attractive.
What do they do? Mining.
No, I mean raw products, right?
Steel raw product.
Like iron ores and all that. I mean, I believe if you believe in commodity will do well in this environment, I think.
Why they are forecasting low?
Yeah, forecast. I mean, if you look at from 2019 till now, they've grown, but they are compared to Nucor, they are growing faster. But they think with this.
Hold on, let me see.
Financial outlook in 2023, which we are expecting recession and all that, they want to be a little bit safer. That's why they. But if you look at their financials, I mean.
Okay. Wow. Base financial. Yeah, looking great.
They are undervalued.
390 right here. Yeah, just like X. But I'm gonna analyze it in depth. So the revenue.
Go ahead.
So EBITDA, if you look at the EBITDA, they are EBITDA is 5.7. So they are basically making is 33%, almost 35%. Yes, 35% net profit, 35% net profit. So if I look at X, 35% net profit is important. Okay, so just a second, I gotta go and compare, check 35% profit net. So X is EBITDA 5.3. EBITDA makes the X makes less percentage profit, okay, comparatively this, but the forward P ratio is there. So these would have more outstanding share outstanding 260, and the other company has what was the okay, right here to statistics, how many outstanding shares, okay, 196. So this is also less. Okay, so this is good actually. They have the debt 1.7 billion, but this is out of country. Remember, made in America. Biden wants everything made in America, right? So United States is in made in America, where this company is out of America, and this one forward to P ratio 390, other one is $2 2 times. That's the one thing. But yeah, if you want to diversify a little bit, yeah. But if you want to ask me, I would go with American company, because made in America is important, which is CLF and X. So X and CLF is the best comparatively, even the forward P ratio wise also. Earning EBITDA, this company is good EBITDA, but I don't like when they are expecting low here, the EPS. So could be good, could be not, but risk versus reward, I would prefer politician. Our US wants.
So if you remember, Zim is also not a US company. It's Israeli.
Those are shipping. I'm talking about when we talking about a material. When it comes to steel, steel only. I'm not talking about even copper or anything. I'm willing to go out of the country, copper and other material. When it comes to steel, then I like to stay with the US one. Steel, only steel. Except if it is beyond, if we don't have a company here who is not producing steel, then I would go. Only I'm applying that fund only steel.
Gotcha. Okay.
But I appreciate, man. You always bring great goodies, man. I really appreciate.
Thanks, man.
Great work. Thanks. I need to add more people. So guys, I get to give a little space to other people requesting. Okay. Okay. I need to add more people. Somebody making. Gopi, I think your keyboard sound, guys. All right, go ahead. Anybody has a question? Go ahead, please. Please go ahead.
Yeah, Josh, you want to check out Twitter, the stock?
Are you long? What is it?
I'm looking at a potential pullback.
And
let me pull up my chart.
Then you want to buy? What's your?
I'm looking long. I'm looking for a small pullback though before I enter right now.
Okay. Yeah, right now
like
is
a week or two.
week or two. I mean, right now looking like there's a huge gap here, so that gap need to be filled some point of time. When, I don't know, but market maker right now they are pulling this little bit here, but we still need to wait for what this week start, because a lot of people were bullish on Twitter the moment the news came out with the Elon Musk, and that's why they are trying to pull, but we got rejected at 200-day moving average right here. And that day we closed, and then again we went down. So there is a gap down here. So if you want to be a long on this, a little bit careful, give a little time. Maybe I would not give 1 week, I would give a little time. You might need a more time. Why? Because the foundation is little weak on this company about the earnings. They are making 33 cents and they are expecting 5 cents. So why they are expecting lower, but they're gonna lose more money? That's my question. Why they are forecasting low? So that's why stock was selling off. If you look at this market, and then Elon Musk news came and it pumped. So based on the news, company is not benefiting immediately. In long run, yeah, I would agree with you. Could be some Elon Musk gonna play big role, but particularly you're talking about week or two. Based on this news, there is nothing immediately happening in company's balance sheet on earnings. That's what I see. So based on that, I'll tell you what I see here. Twitter on a 3W2R. So if I see this, there are the 40 billion market cap, and you are paying 55 time value. So that's a little expensive. It's expensive than the Apple and the Google at this point of time when you compare their forward PE ratio, which is future. Forward PE ratio means next 4 quarters. Forward PE ratio. EBITDA is 697. So barely they are making like a 12% net profit at this point they're making. But if they're earning, they expect, this is the history of last 12 months where the market was great and they were doing good. Probably people used to spend money on Twitter. So at this point, if you look at that, they have a debt versus cash. They have cash in hand, so they have some little debt also, but their outstanding shares are 800 million. That's why stock is little bit expensive. So if I analyze that, I would wait for that earning, man. I do not like to jump in any bandwagon, because what I think here is this. Look at the earning is not that far, so I would wait for an earning. Will be, if they miss the earning, then will be not good, because 28 April is coming. So, and I don't know what is in your mind. Why you want to be a long on this company?
Oh, I've just sent being. I actually called out the wrong ticker. Not gonna lie, because I had my watch list up. I actually meant to ask you to look at Target and not Twitter. Target had that 11% movement last week. I think it was about $23 to $25. Yeah, $23 movement last week.
Mm-hmm.
I'm thinking we see some more upside all the way up into the 250s before we pull back. I know I saw a lot of people who are still FOMOing this, and
Yep, right here. So 200-day moving average is 319 in this, and let me see the EPS. So let's compare with the TGT. What is Walmart symbol? WMT?
Sorry?
1 second. I just need to check real quick.
Target.
No, yeah, but I need to compare what is Walmart EPS is 22 time. Okay, so TGT is let's see. Compare with them. So TGT is cheaper than the Walmart, 14 time comparatively Walmart.
He's comparing all the companies and see if Target is a good price.
Yeah, so EBITDA is 11.7. So they are making around 12 around 11% net profit, 11% net profit on it. Outstanding shares are 462, but they have a debt 16 billion versus 5. So 2.5 ratio by the cash ratio with the cash. Okay, the based on their EPS, based on the EPS, yeah, this company deserve to go a little up, because their forward their These are to be remembered, but there is a 200-day moving average is right here, which is $237. Be careful. I would not go long until unless once the stock cross 237, then I would buy, because market can, if the get rejected, then it can go and test again here. So just once it break 237, 237.50 or something like that, then I would enter, because then it will be bullish. So just wait for this resistance to break 237. It's not about the price 233. Just make sure the market maker support. You need a wind, right? Tailwind. So if you need a tailwind, make sure it breaks this, which is 237. Then I would go long on target, because tomorrow.
Yeah, I typically I haven't really started my long-term portfolio too much, because my portfolio is only around 25K right now. I have a couple of long stocks that I like that pay dividends, like Coke and AT&T, but I'm trying to grow my portfolio towards around 100K before I start expanding into like some other equities. But I'm only 19, so but this is like something that I'm trying to make. I mean, I have like another job that I'm working right now, so that way I can have active income into my bank account, so I don't have to actually take money out of my portfolio. But the goal is to have like trading be my primary job. But would you have any advice in terms of growing it? I mean, like I was looking at my I would just say that my biggest downfall right now is just being consistent when I have like a larger scale play. When I'm taking like $100, $200, $300, up to $500 trades, I feel like I'm way more successful. And then when I start getting into higher plays, like if I'm playing Tesla or if I'm just buying more contracts in general, I seem to be more or less successful and bringing in a return, which is kind of frustrating, because if I have more contracts, I need less of a percent return to make more money. But it's just like I seem like when I have more contracts, I'm just not as successful.
Okay. Gotcha. So I would stay away from Tesla playing like that. Be careful, because you can sometimes you can make a bet, you can bet on it and you can make money, but there's a theta involved, right? So you need to understand about the options. So if you have a time, whenever come by, I'm always live here, and you have to you have to be very calculative picking the options, particularly big ticket item where the implied volatility is super high. Not implied volatility will be high on the Tesla, but people are talking too much on calls and puts on Teslas and all. At that time, market maker also think opposite, right? So you got to be little bit careful. You cannot be just biased on your side, because I'm very, very bullish on Tesla, but then somebody selling, they also need to make money. So they also want to make sure the Tesla goes down, right? And they have the power. You don't have the power to bring the Tesla down. Tesla go up. So right, that's why you also need to think how they think, market maker thinks, right? So that's why sometimes you lose money when buying a big ticket item. So stay away from. Sometimes if you want to be a profitable, stay away from those where risky items are risky. Like how bank always think when there is a risk, they said let's not give a. If somebody has a bad credit, what bank says, we cannot lend you. Like that, right? Same thing, you have to do the same thing. If you think the asset is, you are paying too high premium, too high theta, because when you buy option, you are holding a melting ice cube, right? And then every minute you sleep, you lose money. So Tesla, I would never recommend anybody to play options, because you might make one time, two time, but at the end you're gonna lose, because you need experience to trade Tesla. You need experience to trade a big ticket item, and that's why you need to first learn how to trade. And then you can go and play any stocks. You can play Amazon, you can play Tesla. Otherwise, believe me, man, I'm telling you, you're gonna lose the way you make money, and you're gonna be fastest way to lose money is go and play Tesla, SPY, Amazon, all big ticket item. Fastest way to lose your money, lose your portfolio.
And 20K, if I can add something here, Josh, if you don't mind. I've gone through what you've gone through, and I guess sizing has to be earned. You know, the bigger the size, the more you will have your emotions in the driver's seat, and you will be less objective. That's why you're able to do better with 300, you know, rather than a bigger contract. So I guess just keep the size small until you get used to the whole thing.
Yep.
Yeah, I've been getting gradually and constantly charting throughout the day and stuff like that. That's something that I wasn't doing before. I was kind of just looking at momentum. I wasn't really like charting and stuff like that, but yeah, I definitely can see like my emotions being a factor. But I also think that I need to take a step back from having the expiration date so close.
Oh,
'cause
wow.
now that I have more money to trade with, I don't really have to look for that 3, 4, 500% daily gainer through options. I feel like I should be looking more at maybe like weeks out, month out.
You have to pick a bottom. Always one thing, remember, when you are going swing, make sure you don't try to be avoid a stock, which is always try to pick a little cycle. Look for a cycle. Every stock has a cycle. So when you read the chart, you will see a cycle. If you don't know, you can come and ask. And you know, the more the detail you give me, I will try to explain you in a detail every stock you want to enter. So you don't want to get it into the FOMO. You don't want to get it into the thing that, oh, this because Walmart flying, I'm gonna fly this, something like. Give you an example, okay? Because money, you know, it's very easy to lose, man. In this market, it's very easy to lose when you go and play big ticket items. You got to be very safe and sound to play here right now. So you know, anything you like ticker, always tell me. I will analyze it and you know, guide you, help you. But you might need to deep dive in more. You don't just look at the technology stocks or retail stock. There are many other stocks. Always look at the different sector, analyze the sector, because market has so many sectors, guys, and we always talk in a certain branded name. Why not other branded where market maker is taking those stock going up? So you analyze those. That's what I advise you. Get out of the zone which you are comfortable. Get out of that, and there is another zone where really literally money there. You need to get out of the box, think out of the box. Believe me, there's a lot more money there too. So analyze the sector. I gave you the hint that you analyze the different sectors, different area, and slowly rather than investing money into these, because market maker know where the social media is, and then they're gonna create all the options, and you might get trapped. You want to stay away from that. Little bit careful on those social media.
Yeah.
Who's next? Somebody? Yeah, go ahead, Mr. G Data.
Hi, good afternoon or evening. My question was on SoFi.
What's up? What's your question on SoFi, buddy? Just help me out a little bit so I can understand.
Going long, it's sitting at its all-time low. I know the bad news with the student loans, but they do make money on their home loans.
Oh, okay. SoFi, okay. Did you ever bought the SoFi before?
No.
Okay. Okay.
But it interests me because it's sitting as an all-time low, so I'm hoping that it maybe bounces here and maybe go long. But I wanted to know more about their EBITDA.
Okay, I mean the stock chart looking, maybe if it is bounce, then good. But if let me take a look at their balance sheet is horrible. Their EPS is negative. So if to find an institution like this in this environment, particularly when the credit crunch is coming, where they won't be able to, because the interest is gonna go up, and then based on that, their negative EPS, and they are forecasting same thing, more negative, I guess. And so this stock, let me see SoFi here. SoFi, we need to analyze more. Okay, so SoFi, 8 billion market cap, okay, and then revenue is 977 million. Okay, that's great. The EBITDA is then not there, right? I hate that when they don't put here EBITDA, because how much money they are net losing. I need to know that, and based on the earning per share, definitely they are losing money. That's for sure. Anyway, so share outstanding is outrageous share outstanding, because it's a small company, and if they're a small company, they have 800 million outstanding share. Normally it should be 100 million share, 200 or 300 million. These people have almost 800 million share. So first thing, I think about this. This stock is right now you're paying 3 times. You have to add into 3. So $24 basically you are paying right now on this stock, because they have diluted this stock. They have diluted this company a lot and make the price. So basically you have to look at this revenue. They're based on their revenue. You have to divide this many shareholder. So they have so many outstanding share. That's why company is negative. Their earning per share is negative, and they are hiding here EBITDA. I don't know why it's not here. But this company I would stay away in terms of going long, because this company is $25 based on their earning per. I always look at this way. 16 cent negative means I would not pay $25. Remember, there's always outstanding share. If they go and increase the outstanding share, then the value is not this. You have to reduce the value, because you have to share the pie, right? So that you have to understand. Based on this, they are pulling people. And for me, I would not go long on the. If the market has a cycle, right? Market maker, when they sell, then they have to buy back some point of time. So they buy, and you can have a couple of candle green also. But then long run, if you ask me, no, this company deserve to be. It reached my price. I expected this to go, because it used to be somewhere here, and then I said this, and then I said $7. But it's like if you want to play pure luck, yeah, it can bounce from support and you can play. But our foundation is very, very weak on this company to be a long, because interest rate goes up, this company will have a difficult. People will have the pull loan, and they will not be able to perform, and that's why they're going down. Their revenue is going down. So be careful. It's a red alert on this one. But if you want to play pure play, you know what I mean? Like cycle, bull bear cycle, yeah, then you can do that. But foundation has a big crack on it. This has no foundation, this company. That's my analysis. I'm not trying to be, I know everybody likes the company, but my analysis is like you're paying $25 on this one right now, and okay. They don't deserve to be.
Yeah, no, good points. One thing, they do loans. So does when
they will have more trouble. The people won't be able to pay. Yeah, they will be more trouble. Credit crunch. Whenever the interest rate goes up, they will have a difficulties. People will not pay loans. You got to be very careful when this market scenario. People, when the interest rate goes high and if they loan, people won't pay the loan. To make a 5%, they lose more money. That's why okay. That's the reason. Look at the forecast. Look here, 286 million, and look at here, 279 here, and now they're negative here, and they came out and they said they won't be able to. There was some news last week. Take a look at the news last week. What was it? They said they're not going to be. So be careful. It doesn't let them prove, man. There is a lot of light. Your goal is not Sophie. Your goal is to make the dollar green, right? In your portfolio green. That's bottom line. So if the flight is shaky, why you want to go in there? Yeah, if you want to play pure play, you know what I mean? Play means there is no fundamental. Then you have to in and out very quickly whenever the green candle. If this support bounce, and you want to play around, yeah. But foundation is weak. Look at this, foundation is weak. So I just told you guys, right now it's $25. Stock was here. And I used to say that time also somebody was asking me, and I said same thing, and look at this, it's still doing the same thing. It reached my target price also. I said it's gonna go down also, right? Steel is expensive.
Okay, all right, thank you so much.
No problem, man.
Do you want to check out, have you looked at, I joined a little bit late, HYMC? It's the lithium mining.
HYMC is the Bitcoin mining, no? No. They are gold mining.
Gold? I thought it was a lithium company.
No, they are gold.
Right. Yeah, they are gold and silver. Okay, yeah.
Yeah, gold. So Yeah, this is the AMC play. This is the AMC play. AMC try to buy this company, and is all about the event play. So just be careful if you want to play around, but no fundamental behind. Just be a little bit, this look at their balance sheet. If you want to go long, guys, just be careful. Look at this $19 million, man. That's nothing. So these are all play. If people play little up and down and pump and dump these things. So if you want to lose money, yeah, you can make money, you can lose money, but it's a pure play. It's a intraday in and out. If you sleep on this stock and you wake up in the morning, you will not have floor.
Okay.
Yeah.
Hey, Josh.
What's up, man?
Yeah, can you hear me?
Yeah, I can hear you. What's up?
Okay, I just want your opinion on LSPD.
LSPD.
Yeah.
Oh, this is what is it? Lightspeed Commerce. Okay, Lightspeed Commerce. Okay, let me see. So you are long, short. You have position, or what is it?
I'm more of a. I wanted to buy to hold the stock basically.
Or you want to hold? You want to buy it, or you have the position?
I have a few positions. I want to get a few more.
Okay, understand. You want to average down.
Yeah.
Okay.
Well, actually, I'm at a good price right now, but because it's still at a price that I got it, because it's still low, I want to see if I should get a few more, just because of the how it's been going lately.
Oh, okay. So you've been here first time or before been here?
This is actually I just got onto Twitter this year.
Okay,
Maybe
gotcha.
Just last month.
Okay, so this is earning EPS is negative 7 cents, but why they're forecasting negative EPS 15 cents? Now they want to lose more money. They're saying, company saying we're gonna lose more money. Do you know why they're gonna lose more money? LSPD.
No, I'm not sure actually.
Okay, LSPD. Let's see. What do they do? Do you know anything? What do they do?
To be honest with you, I just got into the stocks myself about 3-4 months.
Okay.
It's just one of the stocks that I've been watching that has caught my interest.
I see. Okay.
But as far as information, I don't know too much about it yet.
All right, no problem. We'll analyze it. So this company is actually losing money at this point right now. Okay, and the outstanding shares are 148 million. The EBITDA is negative 127 million. So whatever money they are making on top, they are losing money too. So they are basically investing money into the company or whatever would be there. That one I would not know, but they are basically they have good cash in their hands. That is also good side. Okay.
Yeah.
Yes, that's good. But they have EBITDA is negative. So I need to look at what the company actually doing. The EPS is negative, so I'm not gonna go in that route right now. Let me look and see what company does. Company does is Lightspeed Commerce
I feel like this could jump at least to $50 before it gives back up.
Mid-sized business, retail, restaurant, and golf course, Canada. Okay. So these are this is like a POS system provider, something like that. Like some sort of software provider company to the lighting speed or something like a transaction something. Okay, so
to be honest with you, I thought it had something to do with some kind of internet or something.
Internet? Whoa.
Yeah, some kind of internet provider or something like that. That's what I thought it was.
They are in Canada. So platform small mid-sized business retailer, restaurant and golf course operator in Canada they say they provide commerce enabling software as a service SaaS platform. Oh, okay. The Lightspeed Commerce. Okay, yeah, you're right. They are Lightspeed provide commerce enabling software. They provide a software as a service for mid-sized businesses, retailer, restaurants, golf course operators in Canada and United States. Okay, so they're providing some sort of software for Lightspeed. So I think I know this company. They are in the price of I don't know if that's the company. So yep, they have a POS system, I guess, software POS system. But based on these, based on their earning, man, is horrible. Okay, I'm telling you right now. So be careful on here, though. It's been rejected here at 100-day and it's going down, and 50-day moving average right here at $28. So it's heading to $20, but you got to wait here. If it breaks above here 28, 22, but fundamental is weak, man. Okay, I'm telling you right now, fundamental is weak. Super duper weak. I would not hold this stock, and based on this EPS, this stock deserve to be $5, $10 stock. This is my analysis. I don't want be a bad apple here, but based on MIS, the money what they are doing, they are losing money. When they lose, there will be no institution who can buy. If company says that we're gonna have a 15-cent negative EPS, if that happens, this stock is going down. There is no money.
I mean, I agree with you too. With everything going on, that I looked at the earnings and everything too. I felt the same way. But just because of how much it's been going up and down, the volatility, and the fact that it's hit up about $40 a couple of times, I feel like before it goes any lower, there's a chance that it might hit the 39, 49 at least one more time.
All right, here 819. Okay, the market has a cycle. Remember, they buy, and then they short here, and probably they can buy back also. So when market will, if you want to play around, yeah, you can play around, but long run.
Do it for a long time. No, I'm not gonna do it for a long time.
Yeah, this is not a long time because you got to be pure. Because and right now your 50-day moving average is right here, so be careful at $28 resistance, and the diversion is down too. So just little bit, just be careful because we need to. I would be go long when 28. If you are playing any intraday, you need to make sure it breaks $28.30. Then you can play a little bit here. But if it is getting rejected here, then it can go down or more right here. It can go to $19. So be careful because the weakness. Every time stock has a weakness, is then it harder to fly high. So always be careful. You need a market. If it is a market weakness, then the stock can go down easily. Yeah.
Oh, okay.
Yeah, that's how I will play.
Yeah, thank you. That's all I want to know.
No problem, man. Thank you.
Hey, Josh, I'm looking at GILD for a long position. It's consolidating right now. I want to wait till after this week to see if it continues to consolidate.
Gilead?
Sorry?
Yeah, man, their blockbuster drug for Alzheimer's is in trouble. So, be careful with that.
Yeah, okay. So why? What happened? This company, man, they're losing money. 150.
No, they are blockbuster drug, right?
Yeah.
There's some controversy with it. So they got approved, and people started piling into the stock, and then I think it's not providing results.
Yeah. But look. Something I found something. I don't know anything what you said, but I just see something. Previous quarter, their earning per share was 159 expected, and they only reported 69. So they lost big time money. But now, next quarter they're expecting 179. You think they will achieve that 179?
Man, they might not have updated this. Could be.
Oh wow!
They missed by 100 before, and now it's at 20 higher than last quarter.
Yeah,
no,
but
you got to look at the. Please find out what they're expecting for the next quarter, and if they have updated that, then it probably might fly high. But if they have not, then it could be a problem.
Do they have any kind of drug, man? You got to be very careful. I mean, stock look cheaper to me. Forward P ratio is 9 times, and EBITDA they have a good EBITDA also. Their profitability is like a 50% net profit, man. So they are minting money some reason, but their debt is 26. So they have 4:1 ratio of the debt. Outstanding shares are outrageous. 101.26 billion. B as in boy, billion outstanding shares. So they have a lot of outstanding shares. So they are raking money, man. Something they are selling where they have a lot of money coming in. But why? How come last quarter they could not perform good? Gilead.
Yeah, man. From what I know is their chief scientist, right? He's a very well-known person in the industry. Whatever he says is like in that industry, right? Whatever he says is pretty big. So this company is running just on him. So their Alzheimer drug had a big issue and it tanked. So I don't know.
Yeah. So then stay away. Like you something is risky. But right now the path is clear to me. If you ask me, there is no resistance right now. We are right here at the resistance, which is previous. I mean, it's just a breakout here, which is 62, and then it can go to 65, 80 also. But this is just a purely technical, okay? Pure technical. I mean, foundation looks good to me. But these are all, whenever it comes to pharma, man, I cannot trust because they have it's like a chameleon. You can change overnight everything, right?
Yeah, actually, Josh, it's a good idea to play it till the earnings. There's a gap to cover. Play it till the earnings. Take half off
Yeah.
and write the rest.
So what I would do is, if it is this cross to 60, $63, like previous day high right here, previous day right here, 60, when it breaks this 63, I would enter, and then you can ride it here, whatever it goes, and then in and out. So this could.
Yeah, that's what I was just waiting to see if it was gonna.
But
it's in that
daily.
consolidation zone right now. I'm not long on this stock at all. I'm just wanted to wait and see if it breaks out as consolidation, grab some calls, and wait until earnings, and then see how earnings goes.
Okay, I got to take one more question from Garmin Seer, and somebody from Pradeep on Discord. Garmin looks like man has a major resistance. What happened here? Is getting rejected. This is the downward channel. So if you look at it, pretty much this channel is downward. You see this, or something is selling off. Why they're selling off? What happened here? Let's take a look at it. Their earning is $1.55. Wow, look at their earning, $1.55 last quarter. But now next what? 144. Oh wow, they're forecasting low. Garmin is forecasting low. That's why. Let's take a look at here. GRM and so if I look at these here, you're paying 20 time forward PE ratio. 20 time forward PE ratio. You're gonna pay. They're making good money though, actually, huh? These people are making almost 28% net profit. Outstanding shares are 192. Yeah, looking good. Debt 90 million. Oh wow, they have money cash in hand too. Only thing is forward PE ratio 20 times. So you paying in this market is 20 times. Garmin. The value of the stock price is a fair $114, $114. They are making money also. So I don't know what did you say about Garmin. You want a long, you have position, or how many days, because everything is timing, right? So the resistance is right here, which is getting rejected here. If you see this area, this line when I draw, that area has been rejected, and we tried this. How many days we tried? 1, 2, 3, 4, 5 days. Right, tried it, rejected right here, right? So stock is basically trading right here in between the channels. So it's pure play up and down right here. So what I would think is this. Stock is right here. It might test this support, and then it can bounce again, or it can break the support. But if you would guide me what is your long term, short term, then I can help you on more. But resistance, we are right in the cluster area where it's not going anywhere. It just market wants to wait for the earning. That's what. So it's basically trading right here. It's not going anywhere. It's basically 110 and 117. This is the area. If it goes down, this is the support, which is $111. And so $5 up, $5 down. The game plan is until the earning. Okay, I hope I answer. How can I request to go live if I have questions? How can I request to go live? I could not understand. I'm live on YouTube as well as the Discord, as well as on Twitter. So you can. I'm sharing my screen on Discord also, guys. Okay, so you can see my screen. People are seeing my screens, and same thing on YouTube, Twitter. So if you guys know Twitter, right here, you can see. Click on my profile, and you see the first link right here. This is live link, and has a Discord link as well as YouTube link. So you can see all this. So I hope the part. All right.
Hey Josh, I have a question for you. Is there a place where you share the tickers that you're watching, or?
No. I don't want to share because people lose money and I don't want that. I want people to come here, analyze it, and if you have any question, anytime you come by, but you can pause and play anything you want to like on my video. I have all the video I recorded on YouTube also. I want people to come here and participate and help the community. Everything is free here. I don't charge anything, and I will not charge. Only thing I want people to participate and help the community and share with the more people and bring the more people here. And that's why I'm helping here everybody. So if you have any questions anybody has, just come by and ask the symbols, and we create a symbol for you, analyze it, and you can have your own list also. And I also create a list and help you out. So if you have anything, help the community. I am looking for a help.
It's crazy just because we were talking about the Chinese stocks, and I was looking at them right now, and they're going to hell.
This is going to hell. It's like there's a lot of flights, right? You can catch whichever safe flight you like. So that's what I teach here. You want a safety. If you want to burn your money, man, a lot of people are there, man. They're losing money. And I'll tell you, the highest money, guys, is in the stock market, man. All these market makers, they rake money every quarter, every week, every month, and when the option expires. Highest money, because when you want to trade, you can do when you go to grocery or when you go to shopping mall, how much you spend? $100, $200. You go to grocery, Costco, $100, $200, right? But when you go to stock market, how much you spend, right? And when you go to grocery, you put your money there, and you in return you are getting something product, right? When you put money in a stock market, 85% people are losing money. So somebody is making money, right? And big ticket item. That's why this industry, when government gives money, stimulus package and all, they put money here. And who made the money? All this money, somebody took it. Somebody took in this industry. Somebody took your money, guys. Government gives prints and somebody takes it. And you don't even know how. When you sleep, somebody takes your money. And that's the fastest way to make money in this industry.
Hey, Josh. So if you want to talk about basically stocks that people might be watching, normally you're looking at stocks when you're looking for things that have activity. So there's stocks out there that will have activity pretty much every day. You're always going to have activity every day on Apple, on Microsoft, probably on Tesla, Amazon, Facebook. There's always a lot of activity there to play with. But you also look to see what's going on with your news. So what do we know right now in China? We know that we have basically more than 24 cities right now are shut down in China due to COVID. Well, 24 cities shut down in COVID means that basically factories are shutting down. If factories are shutting down, ports are shutting down, that means you're going to have volatility in those stocks because there's news related to what's happening there. On any given day, what you're looking for is what's the conversation going on in news? Where might there be volatility going on due to news items? Last week when basically the EU was yakking about basically cutting off Russia coal imports and Russia uranium imports.
Right.
That coal was a good play. Uranium was a good play, on those days because all of a sudden people were talking about it and they understood, oh, hold on. There's going to be a liquidity, there's going to be a commodity issue here with supplies. So what you look for basically into the beginning of any day is listen to your news items and think about, okay, what's the play here? And it's not necessarily just going to be the stock that they're talking about maybe necessarily, but it also might be involving stocks in a sector. So let's say, for example, you're going to be talking about, let's say, NVIDIA. Maybe the NVIDIA news is going on one day. Well, that means you might be finding action in the other stocks in the chip sector. And so you have to kind of listen and look around a little bit and see where activity is. And then especially if you're talking about some sectors, look for companies that might have necessarily a small number of shares. A small number of shares, those stocks can go up exponentially because of what could happen because of their low number of shares they can play with.
Yeah. Interesting. Next question. Somebody has anything?
Yeah, I have one. Is Dina Krispy Kreme?
Oh, what is it?
DNUT.
DNUT. Okay. Oh, donut. Crispy. Okay. $13 right here. Okay. Look at their earning. Let's see their earning. How was it? Oh, this is the new IPO. 370. Okay. Earning is 8 cents. Okay. And they're giving dividend also. That's good. 4 cents. Okay. 368. 368. Okay. 8 cents. 8 cents. Okay. So if I look at the chart, I mean, this is the support area they're finding here around $13 is the support area. Testing the floor. and the exit area is here. So what's your time horizon? You want to buy something for long term, short term, or day trade? What or you have positions, or you want to? Could you help me out to understand more?
Yeah, interested in seeing since the IPO, maybe take it for a long.
Okay. All right. So I think market is waiting for the earning on this one, and earning is coming on May 12th. Probably that will be the case. So let me take a look at their donut. Okay. So if I look at this, 2.4 billion market cap, revenue is 1.38 billion. Wow, that's good revenue. EBITDA, wow, they're making good money, but they have a lot of expenses involved, so they are at least profitable, around 11% net profit. They make their net profit right here. The good thing is insiders are holding 50%. Insiders are holding. That's very nice. And company has a low float, 167 million. That is also good. So long run, this company would be good. They have a little high debt also, but that's fine. You know, company would try to grow. So only what I think is they need to make a little more. They need to reduce their expenditure. If they reduce their expenditure, then they can increase their EBITDA. Their EBITDA is slightly low. That's why the stock could not, jump. If I analyze it, hold on, let me analyze it. So how much is EPS? Is 8 cents, right? So if I do 8 cents, so 32 cents. So what is it? $14 divided by 32. So basically 46 times. So still stock is expensive. 46 times you paying the value right now. So if you ask me, you are paying 46 times. So stock that's why testing the floor. So based on this, that's what I said. They need to increase their revenue. If they cannot increase their revenue, stock can go down, and it can go based on the market, because if the market has a credit crunch, then this stock can be somewhere around floating here also. If the whole cloud market condition change, it can go down. But they need to increase their profitability. They need to double this 8 cents to 16, because right now they are asking is 46 time value, and based on this, that's why stock couldn't get off the deck. It's not about the price, it's about they need to increase their revenue, or they have to decrease their expenditure, one of them. That's why it's little expensive. 46 time you paying. Apple is 30 time, Google is 22 time you paying. When you buy at the Google right now is 22 time. You're paying double the value on this, buying at this price, based on their earnings, based on their EBITDA, based on their outstanding shares. So they need to increase they need to increase this, they need to increase somehow, they need to increase their revenue, then only this can grow. So stock is not going anywhere right now. It's just it's gonna stay here, because it's still 46 time value you paying.
Does your data show like 2000? I know they just IPO'd, but does it show 2000?
No, not gonna show, because if it is a pre-IPO, not gonna be anything here. So I only see the current last quarter, last 2-3 quarters, whatever they had, that's it. So this is the quarter. So just keep eyes on quarter. The EPS need to go. If the earning per share is 8, 9 cents, 10 cents, is not going to go anywhere. They need to have the EPS double. They need to increase their EPS double, at least double. So long run, if you ask me, this stock, I understand whatever you're going from, but long run, if this company will not perform well, they're gonna perform well means whatever their current is, then they're gonna go down.
Yeah, all right. So I'll keep an eye on EPS, and I'm hoping, as offices open back up, they'll be buying donuts for the break room or something. But I'll keep an eye on EPS.
Yeah, let them perform well. Once they perform, then I would enter. But based on this right now is overvalued to me. Look at any stock. Yeah. Sorry, man. If I know sometimes you people like to be bullish, and I analyze it and kill it.
I like donuts a lot, and I wanted to.
It's not about you buying the donut, right? Yeah.
Hey, Josh.
One at a time, guys.
Speaking of food, do you want to check out CMG? It's Chipotle. Honestly, I have no idea why it's priced so high. But I'm actually looking to take a short position. I saw that their quarter four revenue was 21% at almost $2 billion. But based off of technicals, I could see it going lower on the 3-month chart.
And it will be very expensive premium on this. So I would on this kind of stock, you got to be very careful how much is the theta, because you can burn the theta right here. You know, this stock is holding here, and Chipotle, they know exactly how to manage their balance sheet. Remember, they can increase like few cents on their menu and they can make money. So I would be very careful shorting, because their healthy balance sheet. Look at their $6 balance sheet also. So let's go to CMG here. Do not go against the wind. See, so what I think is, you go where the weakness is. What you try to short is because you don't like it. You don't have to think like that. You have to think what market thinks. You have to think that way. If you go against it, you're gonna lose all the portfolio you are building. You're gonna lose. So the forward P ratio is 49 times. So it's little expensive right now, but people willing to pay because their EBITDA is they're making. They are actually right now 15% net profit. They are making net profit. They have 15% net profit. So, and the debt is low. They have the cash versus 1:3.5 cash versus debt ratio they have. But if you take a look at their outstanding share, is very, very low float right here, 28 million shares only. So they be careful. 28 million means, you know, they can maneuver the stock up and down. Depends on it. So yeah, I agree with you. It can go down, but I would not go down I would not go in short myself. I would go with the market. So whenever market take the actions, then you should go, because if the market makers who are holding in that portfolio, they will not let it go down this one. Remember, so you have to go with them.
I was looking at the puts expiring May 6th is what I was looking at.
You'll be burning your premium melt right now. Just be careful. The reason behind it, you want this 50-day average moving break. Let the trend change like this. You see this trend change, and then you just ride with something, one red candle, and then you ride with the second one, and then you out. That's it. You just need a one red candle. So let them, and then you'll be in. Right now is not. I mean, it's rejected here, but because this is not a cheap stock. This is you will be. He'll be burning money. Risk. You know, I do not like the risk because of the expensive stock. You know.
I got you.
That's
I had an alert set. If it was to break, well, I had the alert actually set at 1,610, and I saw that it was rejected.
Yeah. I mean, right now, look, it's rejected 100-day moving average, and it's looking bearish to me also. But we are still here. And but the way I teach here is like how much risk are you taking on this one, because this is expensive puts. That's why theta. Okay, but yeah, definitely is bearish because you are overextended territory, and it going to be bearish. But I need more confirmation to break this 50-day moving average. Once that breaks, so around 1500, let it go 1500, 1510, 1510, then you can ride with it. Will be a good shot.
Sounds good.
Alright, guys, what's up?
The futures, the Nasdaq just keeps dipping.
Nasdaq is weak, man. I told you is weak, but we will see.
It's a 7-layer dip.
7-layer dip.
And the Chinese stocks, I think they're down, 2-3%?
Hey Josh, how are you?
Good, man. How are you?
I'm doing good. Hey, can you check? There is a open ticker is open. I can see there is a call on expiry date will be January 2023. There is an open interest will be 145K. What is going on? Can you check on that?
Or somebody bought open?
Yeah, I can see
in that
Kathy Wood?
ticker is open, OPEN.
Uh-huh.
Strike will be 12.5, expiry will be 1/20/23, open interest is 145K.
Strike price, what did you say? Forgot.
12.5.
12.5. Wow, 144,000. So somebody betting on their open gonna be, going to be crazy. Wow. But this is somebody must be burning premium right now, because this, I remember open interest, people used to buy this stock a lot because of the Kathy Wood involved in this, I guess. And open, look at this, what happened. It's been melting. They're melting. So but right now,
I think this is a leaf, correct?
yeah, leap. So it's coming now. So somebody must have bought it way early, unless when they bought it. But hold on, let's analyze it. Let's see, the company deserve to be this price or not. So they were making money in previous, before mortgage right now. So this is no man. This is, look at that horrible balance sheet. They just showed up last quarter, and look at that negative 31 cents. And now the mortgage rate gonna go higher and higher. And just wait for the May month, and man, this gonna go to the downhill. This stock gonna go down based on this. Yeah, this gonna go down 17 cents. Look at, they are saying, yeah, we're gonna get 17, so that means they're gonna be a low. So long, if they're gonna wait for a couple of quarter, this stock will be $1. Couple of quarter.
I don't know why the open interest is 145K.
Yeah. No, we can be, we got to live in a real world. I mean, though the revenue look great, but look at the EPS is negative. Something is wrong. Something is cooking. Be careful.
What about Neon? I think there is a news on halting the production on Neo. So, what you thought on shorting on Neo tomorrow?
Neo, you want to short?
I
mean, right now the clear path Neo short, but again support is right here at 19.4. I would short when the 1938. I mean, he is looking short right now. He's just, you want to make sure the market. Yep, it is perfect short looking Neo. But if you want to go more short, then 1940 breaks, then it boom gonna go down.
21 puts 14 expiry is at 28,000 open interest.
Market maker, there's a lot of bulls on Neo. If I look at the Neo, the options, let me see. Neo options.
Josh, when you're done, look at AMAT for sure.
So look at these calls options on Neo. A lot of call option people are buying, because a lot of bulls are there on Neo because they think it's cheap value. That's why, but fundamentally is super duper expensive stock.
What level we can watch at 19, or if it breaks 19, we can go for a short.
I mean, you can, during the daytime, I'm here with time if you want to come in, but if you want to take your own decisions at the time, because I always like to see the flow, where the wind is going, how wind is, then I would go. But yeah, I like this floor. You see this right here, floor, which is around 1933, 1930. If that breaks, then it'll be easy glide for you.
It will go to 14, I think. So
then wherever it goes, you just take 20-30%. Don't expect it can go to this or that. You just take your chunk and run.
Correct. Thank you.
No problem, man. Yeah, Dave, you saying something?
Yeah, look at AMAT for shorter puts.
Which one?
AMAT, A-M-A-T.
AMAT, it looks weak right now. What happened to this Applied Material, man? It's super expensive stock. Wow, man, this is like a flying high stock. But these people make money, man. This is software company. Applied Material. Oh, these are appliance. 189, 189. Okay, that's good. But what they are expecting, 191. Wow, they're expecting good. If they miss, then they're gonna be in trouble. This company is looking like pressure is downward. Right now, pressure is downward. If you see this, so if this company misses this, pressure is downward. It's going here, somewhere here. but let's look at the balance sheet. $15 forward P ratio, so it is good, it's not bad. 15 forward P ratio, and then revenue is 24 billion revenue, EBITDA is 8 billion, so they are making money, man. This is good. This is
Neo's down 9% right now. Hong Kong shares.
But Neo has a gap at like 950.
Okay, so EBITDA is Neo looks weak. EBITDA is this is to a 33% net profit company making, man. So this company makes money. Wow, somebody says somebody want to short this.
No. I said look at the chart for possible puts or short.
I mean, looks weak, but I would not, because foundation is strong and there is a support here, so it can bounce also because of their balance sheet. The balance, you need a weakness in the stock, so you'll always look for a weak stock. When you want to short, you got to go to bear list, like all these weak balance sheet, and then you ride when the market is weak, and then you go in a bear list and short, bear stock, and see that. That's how I look. So yeah, right now.
Hey George, Rao here.
Mr. Rao, man, what's up, man? How are you?
I'm good. Yeah, somebody is talking about Open, right? So Open right now in this present market, one should not enter. It's a good company, but the thing
He's shorting. He's shorting.
Okay, shorting also, yeah, might be. I don't even consider taking short position at this point of time. Because these companies, right, so these are small to get acquired. Okay, if somebody puts a bid and acquire the company.
Oh, he's just shorting this week only, like tomorrow, day after tomorrow, 2 days, a couple of days.
But based on what I have experience in this is very much pumped in Mad Money, Kramer's show several times, and their business model is different when compared with other real estate brokers. So they buy the houses in the market, not only do the brokership between buyers and sellers. They buy cheap homes and they used to renovate them and they sell it in the market. So right now with the interest rate hikes and there won't be any more buyers, and even if there is a seller, right, he has to buy Open has to buy those houses, but they cannot sell it in this market. So the revenue will be down, and I'm thinking the next 2 quarters or 3 quarters, what they have will be negative. So it's dangerous to take any long positions. Short, I don't want to comment, but long, if somebody wants to take it. But it's a good company though. So in the low interest rates, this is going to fly. High interest rates, this is not going to, because there won't be any much buyers for the homes. So it is very risky. That is the reason why it fell down back. After the interest rate hike started in March, right? So it started falling, and its high is $25 at one point of time. And the CEO came onto Mad Money several times.
Man, that guy goes in on CEO, man. Mad Money, man. People are losing money, man. Mad Money.
Yeah, Mad Money, 10 out of 1 stock will perform good.
Yeah, but every stock perform good, but when? Timing is important.
Yeah, right.
Timing.
Yeah.
Josh, look at now for possible puts or short. NOW.
Yeah, NOW is a good shot according to my list, and is perfect shot right now too. And but they have their balance sheet is slight better. Let me see, 146, 170. They are expecting earning on April 27. Man, April 27, 169 billion, 160. They might get this one, but let me see what is price. Oh, outrageous price right now. It look like a $500 stock, man, and their EPS is $1.50. Sorry. Yeah, it's a 78 time value you're paying on this stock. 78 time you want to pay based on their EPS. outrageous money. 5.9 billion revenue. EBITDA is 709, so they are making 15% net profit, so that is fine. But you paying, it's like you're paying outrageous money. That's it. So if the balance sheet is,
it shows George, it shows 454 times P ratio
on what, on now
TD trade. Yeah.
Okay, let me analyze it. I don't care about what TD says. I will
You're
calculate.
talking about the forward P ratio or
Yeah, I'll check it right now. 1 second. I check right now. 17170. So 680 515 divided by 6.80. 75 time. 75 time based on this future. Based on the curve. This one is 143. So 75 time is fire. This is a future I'm talking about. 75 time right here. Look, is right. Yeah.
might be with the last earnings.
No, still cannot be that number, wrong. But yeah, if 75, the forward is future. Forward is expected forecasting. So they are 78 times. So they are a little expensive. They are quite a bit expensive. If the market goes down, this stock goes down. But their balance sheet is profitable. But they deserve to be. They deserve to be somewhere here, somewhere like based on the earning, like they're supposed to be $200-300 stock, but they pumped up because they have a strong contract with governments, and this company has a good revenue coming. But people are paying higher volume, but now market maker taking down. So the trend is bearish right now. Look at this. Every time this line touches, it goes down. So trend is bearish, and it's going to test this floor. Yeah, so trend is bearish. Somebody want to short? Yeah, he's looking perfect short. This is man. I'm telling you right now, market. I today morning, if you rewind the tape, I just told you guys. It's up to you how you take it, because I analyze, man. I don't analyze just charts. I analyze lot of things.
The wheat futures is up like 2.5%.
Oh yeah. Wheat looks right here. Look, wheat. All the food everybody needs, man. Every time you go, you recycle 3 times a day. Everybody needs oat, wheat, corn, everything. Look at the VIX, man. It's flying high, guys. I told you, like today before I start short, I said that. Look at this VIX, man. I say, this is the perfect rebound. If this goes, market will tank, and I feel like that. I just wait. This week is bad. This week look like a market wants to react. Market wants to react this. So if this goes down, if we take the 50-day moving average, game over, guys. If we take 50-day moving average, which is 441, that's the necklace right here. If this break, trend is super going to be bearish, guys. Boom, boom, boom. Then enjoy the party then. Okay. All right, guys. Anybody has any questions? If you guys can help on Twitter, guys, please, while you are live, who are joining first time here, follow me. You can get all the alerts, and always look at so many people join the group, but nobody even come and retweet this video. I would appreciate if you guys can help me out, just like how I try to help you out, guys. Please click on profile, and there's a first link here. You can retweet so it reaches to the bigger audience. I need help from you guys. Always retweet. I understand, but retweet is important because it can go to the bigger audience. So help me for that. Retweet first and second. This is video and this is audio, where you interact. So wherever you can retweet, video retweet, would appreciate. Yeah. All right, we can take a final question, guys, before we jump in tomorrow morning. It's 10:30, man. It's been I didn't take my dinner yet.
Maybe top watch for tomorrow.
Top watch? No, man. It's all. Look, I'll tell you something about top watch. If you have any list, I'll go through that. But I do not anticipate myself. I want the market maker to take the decision whichever direction they want to go. So there are many stocks we went through today. But if you have in your mind, I can go through. at the stock. But what I do is, you come live, I'm always live in the morning, like 9 to 8 o'clock, or like 7-8 hours I'm live streaming, just like how you see here. I share my screen. So I don't know, you joined first time, but if you want to join this community, we are always live, and I share the screens, and I go with the wind. Wherever the market maker takes the market, and I go behind them. That's what I would teach.
Where? On Discord?
Yeah, on a Discord, on YouTube, and Twitter. So I don't know, are you on Twitter right now?
Yeah.
So if you click on Twitter, my profile.
Yeah, I saw like Discord link and the YouTube.
Yep. So
I
there.
retweeted the
Yep.
the top pin, right? The pin tweet.
Yep, pin tweet. Yep, that's the one. And then you can click on. There's a bunch. So I always go live on YouTube and Twitters and Discord. So what happens if you want to interact with me, then you have to have the Twitter space. But if you don't want to interact with me and you want to just simply listen to me on view the video, then you can go to YouTube and Discords. But if you want to have a questions and interact with me, then you can come here on Twitter space.
Okay, gotcha.
So I hope everybody knows that this week, Friday, market is closed.
Oh yes, but before that we we discuss about the CPI data coming on this Tuesday, guys. So be careful on Tuesday CPI data.
Even inflation on Wednesday, right?
No, Tuesday.
Inflation.
Yeah, the CPI inflation Tuesday data coming out, and 12th, and then Thursday Wednesday bank earning also. Banks earning JPM, I think JP or GS. We cannot see that, but it's earning coming in, so we gotta be very careful. There's a lot of things will be happening. So.
Kathy Wood said that there's a big trouble ahead for banks. How is it?
Yeah, I feel it too. It's gonna be bank would be in a big trouble because they are vulnerable everywhere. They are vulnerable internationally. They are vulnerable local also. Local bonds are suffering, and international their exposure to rubles and European banks who are already vulnerable. So there is a little thing going on that. Let's see. There's a lot of things are not good now. This is the perfect time we are going to be short. But I don't want to go first. I want to go. Let the market maker go, and we go. I just discussed, right? We need to go with the wind. Let the 50-day moving average breaks. Once that breaks, it will trigger in every system that hey, market broke 100-day, 200-day, and 50-day. That means 100% confirmation, and market gonna tank. So, but again, let's see how thing goes. Yeah, looking like that right now so far. Yep. Okay, guys. So always follow, guys. Okay, or help us out and follow each other on group also, and help Top Trading Edge follow here. And always when I retweet in the morning when I retweet all these links that I'm going to be go live, please try to retweet that and share with other whomsoever you can share. I would appreciate, because that's how we can grow the community bigger, and I needed your help to keep this community free and benefiting. I need your help, guys. Market is down. All right, anybody has any question, guys, before we call it a day? Okay, so no questions. Okay. Alrighty, guys. Then I will wrap it up. So probably see you tomorrow, guys. Thank you for being here. And morning. See, I'll open a space for morning, so we can be alive in the morning. Slowly, we're gonna join in the morning. So wish you a good night. See you tomorrow morning, guys. Thank you for being here. Thank you for your time.
See you in the morning, Josh.
See you, Joseph. Thank you.
See you in the morning, everybody.
Have a good night, everyone.
Have a good night.
Good night. Okay. All right, everybody. Good night. Let me close these. Okay. Good night, YouTube. We'll see you guys tomorrow. Tomorrow we'll be live in the morning. Need to close. Okay. Yeah. Good night. Good night, everybody.